Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, January 3rd, 8:46 a.m. Eastern Standard Time, and we are back once again to analyze the global capital equity markets. Folks, this is the second day of, second trading day of 2025. We got through the first one yesterday, and outside of Tesla and Sofi, that kind of didn't have the best day, and we'll be talking more about them today. Rest of the market was kind of flat to okay. Some stocks were up, some stocks were green. Indices were slightly red. Some of the indices were slightly green, like small caps, but overall, nothing too crazy out of the first day. We did get a bunch of headlines, and we have a lot of headlines this morning that we'll be discussing in terms of the implications it is going to have for the next couple of weeks. But next week, we officially do start earnings. So we're getting into earnings season really in the next couple of days. And then the week after next week, we really begin earnings, starting with financials. The week after that, we have Tesla and Netflix to kick off technology earnings. So got a lot of stuff to talk about, a lot to get into. It is Friday. You know, it doesn't really feel like a Friday. It didn't feel like a Thursday yesterday. Yesterday felt like a Monday. Even my sister, she came home from work and she felt like it was a Monday, right? Because you're starting off the new year. But because it's in the middle of the week, it felt like weird that we were starting the new year on a Thursday. But nonetheless, we are here on a Friday, and it doesn't feel like a Friday. Yesterday felt like a Monday, but this is the last day of the week. And then we're back to opening the markets next week on a Monday. We are closed on the 9th next week, correct? We are closed on the 9th, but outside of that, we will have a full week next week as well. Good morning to everybody. First of all, big shout out to Beneficial. Today is his birthday, so shout out to Beneficial, good friend of the channel, good friend of the chat. Been a big supporter for the past couple years now. It is his birthday today, and happy birthday to you, Mr. Beneficial, whose name is Ben. I found out his name is Ben, so now I get why it says Beneficial, because his name is Ben. So I love it. Beneficial, happy birthday, brother. Thank you for being here, and thank you for being part of the channel. Gene as well, so saying happy birthday to him. Super cool stuff, dude. I think you're in your 30s, right? So you're turning what, 32, 33? Let me know in the chat how old you are turning. The markets close on the 9th for Jimmy Carter's passing. So every time a president passes away, there's a day of observance. So that's not going to be like an annual thing, but that's going to be happening for January 9th. Walt, good morning. Ian, good morning. Quarantine Quartet, good morning. Midwest, he turned 31. All right, I love it. I'll be there pretty soon. I got a couple years left, and I'll be in my 30s as well. Thank you for being here on Beneficial, and good morning to you as well. Exposing the government name and the age is wild. All right, well, we don't know his last name, so Ben is a decent way to describe someone. I was always like, on the New Year's Eve, I was like, dude, what is Beneficial's name? Because we see his name in the chat every day. Then I asked him on Twitter. He's like, his name is Ben. I was like, oh, that makes a lot of sense. I love it. For real, good morning. Good morning to everybody. Tom Brady, what's up? Wong Invest, what's up? Good morning to you. June, good morning. Cole, Tess, Ian, Erwin, John, Andy, Steven, what's up? What's up? Thank you, everybody, for being here this morning. Does it feel like a Friday to you guys? It doesn't really feel like a Friday to me, but it is a Friday. Sanjay, good morning. Gail, good morning. Craig Smith, good morning. Lulu is late. Shout out to Lulu. He was on the New Year's Eve stream as well. Good morning to you guys this morning. It doesn't feel like a Friday, right? Yeah, no one feels like a Friday. No one feels like this feels like a Friday. Ken, what's up? Karan, good morning. Hugh, good morning. Yeah, it's weird, right? This just doesn't feel like a Friday. It does not feel like a Friday at all. But nonetheless, it is a Friday, and we got the weekend to go right after this. Beneficial says, thanks, everyone, for real. I have no life, so you guys are like my second fan. It's okay. We all have no life either. We're all here listening to stock market analysis to try to make a little bit of money. So none of us have a life. All of us are deeply invested in markets. And hopefully that investment in markets allows us to have an actual life one day. But thank you for being here, sir, and happy birthday to you. All right, so I think we should get started. It's a Tuesday-ass Friday. Yes, it's literally like a Tuesday-ass Friday today. This chat is life. That's a better one. So, that should have been my answer. This chat is life. I missed my opportunity. That should have been my answer. This chat is life. It is true, though, man. I mean, like, look, a lot of people, right? They don't really have a community where they can discuss things about investing. And for a couple hours today, I'm just kidding. Everyone obviously does have a real life. But for a couple hours a day, if you can be with that community and hopefully get insights and valuable information and obviously humor and entertainment as courtesy per me, you don't have to say thank you for that, but it is what it is. then, hopefully that makes life a little better every single day as we learn about the markets. All right. So I think let's get into it. Let's start off with Tesla. Let's get into that. Tesla right now in the pre-markets is currently up a little bit. Tesla had one of its worst days in the past couple of weeks. It had the worst day in the S&P 500 yesterday, down about 6%. And it took a little bit of a nasty beating. Right now, it's at 379.9, so it's up very slightly in the pre-markets. It was down about 6% yesterday. Went all the way to 373, then bounced to 379. So if we break 373 today, we'll know that there probably is a little bit more pain to come. But right now, Tesla's down 6%. So what are the implications of what happened yesterday? First of all, why did it fall? Tesla fell because of the deliveries miss by 2%. 495,000 versus 505,000. I didn't think it was that big of a deal. I think a lot of you guys probably didn't think it was that big of a deal. Unfortunately, Wall Street did think it was a big deal. And the reason Wall Street thought it was a big deal was for a couple of reasons. Number one, top line revenue is not going to be as strong as what Wall Street thought it would be. I mean, there was some expectation on the high side that thought it would get to 515,000. That's not going to happen. And so if we don't get to 515,000, well, I mean, you're just not going to get those top line revenue numbers that are going to be super exciting when it comes to Tesla. Another argument the street is worried about is that in Q3, one of the reasons the cost of goods sold for the car was so small or was the lowest ever is because of some incentives that had to do with energy and EV credits. That is a Q3 thing. It's not a Q4 thing. And so Tom Narayan, which we'll listen to in a little bit, the RBC analyst who's bullish on Tesla, he was talking about this. And basically he said, if that same metric isn't tracked in Q4 because it's a one-time thing in Q3, margins might go down because their cost of goods might go up on top of the fact that they're not selling as many in terms of volumes. And then you've got a little bit of issue of the street going back to the margin story. Now, again, if you're investing Tesla at this market cap or even half of this market cap, would you care about the margin story? No, because there's no way you can justify the multiples based on auto margins. But nonetheless, will that create some volatility in the stock? You bet so, right? That's just the nature of the game, and that's the nature of how Tesla operates. So that is the concern right now around Tesla. It is the question of how margins will look like and what Q4 will be, even if these delivery numbers were not that good. Now, having said that, also not legal advice is correct. Concerns and margins are in battery, and margins of battery could drop as well. Yes, so there are those external fears around margin batteries that could hurt the overall vehicle margins for Tesla. We do have some upgrades, even with the bad deliveries numbers that Tesla put out yesterday. So Canaccord Genuity raised their price target to 404 from 298 with a buy rating. They said, despite weaker than expected deliveries, we are sticking with our buy rating. We feel that this multiple is justified based on the multiples and growth rates of Tesla's comp set, which we deem to be a group of mega cap tech stocks, basically comparing them to the Mag 7. This set of companies trades as a median of 23 times 2027 EPS, but as a combined revenue growth rate of half of Tesla's from 2025 to 2027. Longer term, Tesla also has a generational set of growth opportunities ahead, including EVs, autonomy, energy, and robotics. We acknowledge that the limited upside implied by our price target, but believe it is appropriate given the near-term volatility. So basically, they're saying, hey, we think Tesla should be at 400. We know it's basically already at 400. We do think shares will drop from here because of the short-term headwinds in terms of deliveries. However, you can't deny autonomy. You can't deny energy. You can't deny robotics. And for those reasons, we are upgrading Tesla. Stifel came out yesterday and pretty much did the same thing. They kept their $411 price target on Tesla, even though they acknowledge, it's probably going to suck in the short term, given the earnings growth might not be as good because of the deliveries growth not being the best. But we kind of don't care because long term, we think that the growth story is still intact. And so I think that's kind of my thesis as well. Do I think there could be some volatility in the short term on Tesla? Yes, but that's not really a Tesla thing. That's more so large caps in general are a bit overextended and people are scared of a correction. How do I know people are scared of a correction? This is the easiest stat to look at. I mean, and this kind of solidifies in my mind that people definitely are getting a bit risk off. Yesterday, money market funds went up by 42 billion. So total money market fund assets increased by 42 billion to 6.85 trillion on the sidelines. Pretty incredible that there's basically 7 trillion on the sidelines. Now, this money is not coming from people's savings account. It's not coming from people's paychecks. It's coming from them selling other assets. If you're putting money in a money market fund, you're already in the investor class, which means you are likely reallocating that capital from somewhere else. So likely crypto and equities, and more likely than not equities, the reason they took a hit over the past 2 weeks in December, towards the end of the week or towards the end of the year, is because we had $100 billion. We had $54 billion last week also get into money market funds. So 42 plus 54, about $96 billion left the equity markets, and they entered into money market funds. And I'm not sure it's 100% of that 96 billion, but the point is money decided to take a breather, to go for a 4% yield from a money market fund, be a little bit more safer. And that means equities like Tesla didn't get the liquidity of that 96 billion that money market funds got. Along with the volatility of these growth rates and deliveries, that probably is setting us up for a little bit of weakness in Tesla. Now, that's the bear case. The bull case is that the market says we don't care about deliveries, just like the market said we don't care about the EV tax credit. Remember, Tesla dropped 7% the day that Trump got rid of the EV tax credit, and literally a week later, it was up 15%. So it recovered the 7%, and then it got another 8%. So the market didn't care, right? The market really didn't care. I don't know if this is the same situation, given EV tax credit is more so based on narrative. Delivery growth is based on hardcore numbers that the market cares a little bit more about. So I don't know if we get a sort of reversal today or next week, but do we have to go all the way back to 300? I don't think so. I mean, look, we would need some really big macro headwinds to get back there. And so we're going to see. We're going to see ultimately what happens to Tesla. But right now, that's kind of what we're looking at right now at this 379 price. So that's what we got on Tesla. We'll talk more about it a little bit later. We got some other price targets and analyst upgrades on Tesla that we'll talk about, but that's sort of the main story from yesterday. And tomorrow we're going to get a deeper understanding, or not tomorrow, on Monday, in terms of how the street reacts. Also, earnings looks like it's going to be on January 29th. We do have an official date for SoFi earnings, January 27th for SoFi. January 27th for SoFi. And let's transition to SoFi right now and talk a little bit about them. So this came out just now. I took a screenshot on my phone. January 27th, we will get, you can, you don't be blinded by the shininess of the nails. It's okay. But look at that. January 27th, 8 a.m. I'll be live for SoFi earnings. The SoFi downgrade yesterday was stupid, and I made a trade based on it that I'll talk about in a second. But today, SoFi's up in the pre-markets because they got upgraded. So Deutsche Bank, my favorite bank in the world, because I love saying that name, Deutsche Bank, they upgraded SoFi to $14 from 11. And this is their reason. Positive sentiment for November election boosting consumer business confidence. Anticipation of a pro-business political environment in 2025, aka Trump. Adjusting their 2026 earnings estimates, aka increasing it. And essentially, they took their price to earnings based targets and they rolled forward that to 2026, which allowed them to reverse engineer a valuation that got them to $14. So you had one bank yesterday, KBW, essentially say that SoFi is worth $7. And you had another bank today, Deutsche Bank, which is a little bit more, I would argue, trustworthy than KBW, just like a larger bank, a little bit more analysis from them, saying, actually, no, if you do the math and you look at the growth, SoFi should be worth at least $14 from 2026 estimates versus $7 from how KBW came up with their analysis for. And I think it was just not good. I think it was just not good at all in terms of how KBW navigated this. DDI, great analysis on SoFi, or analyst on SoFi. He had a really good breakdown of this thread. And I mean, the thread was pretty killer in terms of how he broke down their numbers. So just to give you a little bit of a recap right here, this is what kind of did it for me. And this thread made me have a better understanding of why I would jump into SoFi. So KBW assumed 550, 567, 586, and 593 million in terms of revenue growth for SoFi. They did 580, 597, 689, and next quarter they're going to do 675. So they misrepresented earnings estimates. Again, this is an investment bank that's not supposed to get these numbers that off. They misestimated by $250 million. Okay, maybe that's just one thing. Let's look at adjusted EBITDA. They said SoFi is going to do 113, 121, 130, and 125. SoFi did 144, 137, 186, and it looks like they're going to do 171 for Q4. So, I mean, this thread was really good from DDI because he's basically breaking down that KBW has no freaking clue what they're talking about when it comes to SoFi. And it leads you to believe that they're getting paid to short the stock, or they're getting paid by special interests to like issue short reports, because you can't effectively have a reasonable argument around, so just like Gordon Johnson, who reiterated his sell rating on Tesla with a $24 price target. You can't legitimately believe in something like that unless there is an incentive to do it. Otherwise, you're just like an idiot. And either KBW is the most idiotic form on Wall Street when it comes to SoFi, or they're getting paid off. Either way, I thought it was stupid. I thought it was very, very stupid. But as per what Amato Music says right here, KBW gave us a discount. And yes, they did the exact same thing on January 3rd. It is hilarious how history repeats itself. But that's why I felt comfortable getting into a SoFi trade yesterday. So what did I do? I sold 15 puts at $13.50 on SoFi, collected about $100 per contract. which was $14.85 in total off of $20,250 in collateral. So if SoFi is above $13.50 by January 31st, that is a 7.3% return in a month on that money. 7% is obviously not normal. It's something that only happens if there's sort of an asymmetric risk where you are willing to sell a put pretty much at the money because you believe that the stock shouldn't be trading at that level. I sold this at $13.90, not $13.50, so it wasn't exactly at the money, but nonetheless, it was kind of close to the strike price. And that's as soon as I sold it, literally 20 minutes later, SoFi was at like $14.15. So I kind of got lucky by getting the bottom here. But when there's a 10% correction on a analyst downgrade, where the analyst doesn't know anything about SoFi, yeah, that to me is a reason to get more excited about jumping in at that point. So I know a lot of you guys bought some shares yesterday. If you bought in the low 13s or low 14s or high 13s, low 14s, maybe that is the bottom. We're going to see kind of how the street reacts to it. Tesla just went red in the pre-markets. Yeah, just went red to 378. Now it's down. SoFi is green, up 0.5% in the pre-markets at 14.19. This stock, oh wow, it hit 1375 yesterday. Yeah, this stock did not deserve to be below 14 or anywhere near the low 14. So I think we get a rebound. It might take some time. Maybe we do get back to 13 or 12 or 1250, but that would be a ridiculous buy the dip opportunity, in my opinion, if we get there. So in terms of SoFi, I think it's going to be okay. Tesla has a little bit more volatility given the delivery numbers were not the best. SoFi just went down because of an analyst, and it doesn't seem like that analyst knew that much about SoFi. So that's what we got on SoFi and Tesla. Doug says, so are we getting a 10% on SoFi today with an upgrade? We're probably not going up 10% on SoFi with an upgrade. We it tends to go down on a downgrade, but not up on an upgrade, unfortunately. So maybe one day those numbers will reverse themselves. But at least for now, I think going into earnings, SoFi's in a good spot. And as long as Noto crushes earnings and maybe shows us some more growth in the tech platform, especially with guidance, that can get the street very excited going into Q4 or going into 2025. Okay, let's talk about Bitcoin. So Bitcoin's been holding up really well, even with some of the data we got yesterday. So this data was not the best data, and we've been talking about this for a while. It finally manifested in itself. ETF inflows started to get really bad last week. They were good from November 27th to December 18th. Yesterday, or over the past couple of days, they were not as good. Yesterday, BlackRock had its first major outflow day in over a year, essentially. The ETF launched in January. It has not had a day of losing $332 million in outflows since the ETF launched in January. So January of 2024. So it's a small amount. It's 0.7% of the total assets under management. It's obviously not a ton for BlackRock, but they did sell 3,510 Bitcoin. And that leads more to this sort of risk-off thesis that the market's been running with, which is that people are kind of taking some profits in equities, taking some profits in crypto, maybe pushing that money into a high-yield savings account, putting that money into money market funds, letting that money just chill out for a bit before they decide to get back in and take more risk with their capital. So a little bit of a sell-off on Bitcoin from BlackRock, but Bitcoin held up very well. Bitcoin held up very, very well. I mean, the fact that Bitcoin is... Where is Bitcoin? The fact that Bitcoin is at 97, 96.5, and it was at 91 on New Year's Eve, and we did get to almost 98 yesterday. It looked like it was trying to go back to 100. Not bad. Not bad at all. And so the ETF outflows are not necessarily hurting Bitcoin to such an extent. Now, Michael Saylor has not diluted and did another at the money offering on MicroStrategy yet. The stock right here at 300, up 3.59%. Maybe next week. He's done it for 8 weeks in a row. So if we get a notification on Sunday night that Michael Saylor tweets that it's time to buy more Bitcoin, which is basically what he says every time he tweets a picture of this like Bitcoin chart, then Monday morning, we know we're getting some more dilution. So the question, and he has another $6 billion he can do this with. So he has a lot of more Bitcoin he can buy to dilute shareholders with to get the capital to buy. The question is if he's going to do that and if that's going to make a dent in Bitcoin starting off for 2025. Yeah, usually he does it on Monday. So we'll see. Sunday night, we get the notification. Then maybe he does do it on Monday. Saylor was at Mar-a-Lago last night. Wow, I didn't know that. Interesting. All right. Looks like Saylor's talking to the president-elect or potentially a bunch of people in the administration. Saylor did say he is getting friendly with a lot of people in the new administration. He didn't necessarily say if he's talked to Trump yet, but in an interview, he did say that he's like talking to many people in the administration. So I think his biggest priority right now is to see if they can get this Bitcoin reserve done. Because if they can get it done, I think Saylor at least has not only the ETFs from an institutional perspective to lean on, but also the Bitcoin reserve to lean on, right? Because now you have that Bitcoin reserve that is at least propping up there's going to be a minimum of a couple 100,000 Bitcoin that are being bought by the United States federal government. So that bid is always going to be there along with the ETFs. So Saylor's not going to be the one doing it on his own every single week. But we're going to have to see if that happens. Now, one of the reasons we might not get the Bitcoin reserve, quite frankly, SoFi right here, 1422 in the pre-markets, is because Saylor is the reserve. That's hilarious. I mean, at this point, basically, Saylor is the reserve. One of the reasons we might not get it is because Mike Johnson might not be approved as a Speaker of the House today. So in the United States, for those that are international, we have two parts of Congress, the Senate and the House of Representatives. And the House needs to vote on the House Speaker. The House Speaker is one of the people that is the Speaker of the majority party. And they're basically able to galvanize, get laws passed, get the votes, get everything ready. Basically like the group project leader to be able to get stuff done. But in this case, the project is fix the United States. So Mike Johnson from Politico is being reported that he currently lacks sufficient votes to continue serving as House Speaker. Now, remember, last year, there were a lack of votes as well, and Mike Johnson actually became the House Speaker because there was a lack of votes for the previous Speaker. So in this case, now you need to get the Republicans to all agree that we are going to have the person that is unilaterally going to be decided as Mike Johnson to lead the House. The question is if he can get the votes. Trump issued a statement today saying that he fully endorses Mike Johnson and believes he should become Speaker of the House. Elon Musk has endorsed him. So look, I think the vote will go through. But if it doesn't go through, then that's going to be a little bit more volatility for potentially equity markets, because then there's lack of leadership inside of the White House, right? There's lack of leadership and uniformness within the party that won the executive branch and the House and the Senate. So like you kind of do need those things to map up and go well so that we can start getting legislative initiatives accomplished in the first 100 days. You don't want infighting within the Republican Party just to be able to get people to be affirmed as like cabinet nominees or speakers of the House. But we don't know, right? So that's another thing that we're gonna have to worry about in terms of how this plays out. So the reason I'm saying this in the context of the Bitcoin reserve is because if we can't get a Speaker of the House, we're not going to easily pass legislation to get a Bitcoin reserve, right? So it's like we got to get a lot of shit done before we even think that a Bitcoin reserve can easily happen. Grab is up 1% in the pre-markets. Okay, very cool. Grab's been flat for the better part of 2 weeks now. I think it's going to stay flat. The biggest problem with Grab, in my opinion, has nothing to do with Grab. It has to do with what we talked about last night, which is the dollar. Dixie. DXY, this thing is not coming down. It's slightly down in the pre-markets, but it's at 109. It was at 112 in August 2022. August 2022 was a different time than January 2025. Inflation was at probably more than 10% at that time. And we were raising rates aggressively. Now we are cutting rates and inflation is at a little bit under 3%. So the dollar should not be this high. Until the dollar goes down, I don't think Nubank, Mercado Libre, Grab, et cetera, are going to get the tailwind. What is going to be funny, though, is that if the dollar starts coming down, I think those three stocks in particular, A, because they're good companies, but B, because they are affected by currency exchanges, they should naturally move up. Like Grab should naturally start to get a tailwind as the dollar comes down, given that will help their currency. But we just don't know, right? That's going to take time. So I expect Grab to be flat in this position, not really move until earnings. Earnings is also going to be a big catalyst. My conviction for them is very, very strong on earnings. And as long as they can maintain profitability, increase free cash flow, and grow their EBITDA margins, I think Grab is closer to $6 after that earnings, just based on the natural tailwinds that they have and their momentum. But it could also go to 350 if like the currency headwinds are too strong. So this is one that you got to be very patient with because it's just going to take time for it to ultimately play out. Only one word needed to do well in 2025, or only one word needed in 2025 to do very well. NVIDIA. Yeah. Speaking of NVIDIA, I mean, I believe you are correct on that. We're gonna have Jose on the show at 10 a.m. and he's gonna give his thoughts on what Jensen's gonna talk about on the CES keynote January 6th when it comes to NVIDIA. But Bank of America upgraded NVIDIA to $190, or they reiterated their $190 buy on NVIDIA. And their number one thesis for NVIDIA is that they believe robotics, the physical embodiment of AI, is something that Jensen's going to lean into. Loop Capital has NVIDIA doing $250 billion of revenue by the end of 2026, which, I mean, like, if they can actually pull that off by 2026, meaning they would get at least the $5 of EPS by 2024 or 2025, again, you put a 40x PE on that, that's a $200 stock, 40 times 5. So, I mean, it does feel like the concerns about the cyclicality around NVIDIA and the CapEx build out that might not be as strong as it was in 2024. Of course, it's not going to be as strong, but it's not going to slow down as aggressively as some people think it's going to slow down, or at least the bears think it's going to slow down, which, by the way, there's not a lot of bears on NVIDIA. I mean, the only Wall Street firm that is bearish on NVIDIA is D.A. Davidson. I forgot their price target, but they're the only one that's bearish. Every other single Wall Street firm has a 150 and above price target on NVIDIA, and most of them are in the 180s to 190s. So NVIDIA is still the darling of Wall Street. It's not really the ugly stepchild by any sense of the imagination. 139.50, NVIDIA's up another 1% in the pre-market. I mean, NVIDIA's basically back at 140, and it was at 126 on Christmas Eve. So it does look like if Jensen can crush this keynote, and if they can get investors excited again, and Q4 earnings gives us $40 billion in revenue, they said $37 billion, we're probably going to do $40 billion, and they guide nicely for Q1, NVIDIA should be able to continue holding up a decent amount of the stock market as well. So that's what we got in the context of NVIDIA. Wow, Bitcoin was invented and released 16 years ago today? Really? Okay, that's pretty damn cool. I did not know that. Bitcoin was so January 3rd, huh? All right, well, there you go. Bitcoin was invented 16 years ago today. I wish I was I wish I cared. You know, it's so funny. In 2016, I was at this summer camp, and I remember this like it was yesterday. There was a guy who told me about Bitcoin, and it was at a debate summer camp, and he was just like, "Yeah, dude, Bitcoin. I'm like on this website. It wasn't Coinbase. It was like some weird exchange, right? Because Coinbase wasn't that popular at the time." And he was telling me about it, and I was like, "Wait, you put money into like your computer for this like digital currency thing?" He's like, "Yeah," and he was talking about it, and I just I didn't pay attention to it enough. I don't think he's sold his. I gotta hit him up one day because I am still friends with him on Facebook. I mean, dude, if he still has that Bitcoin, he should be doing very well. And he was my age. Maybe he was like a year older than me. So I never paid attention to it as much as I should have. You know, but if you did all those years ago, you are not doing too bad. All right, let's talk about macro. Because there's a lot to talk about in the context of macro. Ian, thank you for the 10 euro super chat. That's a euro, right? That's definitely not a pound. That's definitely a euro. Hey, Amid, greetings from the UK. Love your channel, and thanks for helping me 5x on Palantir. Any thoughts on ONDS up 25% pre-market and Red Cat with this Palantir agreement, all three in the defense sector? Don't have any thoughts on ONDS. I'll put that on my list. I have not looked at that one. ONDS, yeah, it is up 26% in the pre-markets. This is a small cap, though, so this might be moving off just some momentum that it's getting. Red Cat, I don't know much about them. I do know they have a deal with Palantir, and I think that's a really exciting deal. But again, Red Cat is up 1,500%. I think a lot of these stocks that are up are not up on fundamentals. They're up on just pure momentum. And the only problem is if we get any little bit of a pullback, I think those are the first stocks to get hit the hardest, right? Because they're up not on fundamentals, but on momentum. But they are small caps, right? And so if you get a certain amount of people to buy into it because it's a small float, the stock can go up. So no thoughts on those two. I'll put them on my list. Red Cat, I'm still doing some due diligence on. But given both are small caps, I would just be a little weary of valuations because any pullback in the large caps could take the small caps down. Now, if the large caps fall, but the small caps stay up, then that means those are really good small caps because the market is basically like, yeah, we like these companies, even though we should be a little bit more risk off at the moment. It was a pound. Goodness gracious, bro. Why is it so hard for me to differentiate between the euro and the pound? I don't get it, dude. Like, I feel like I need to have like a picture just like on my desk that shows euro and pound. Like they look so freaking similar for some reason. I don't know why I mess it up every time, bro. All right, that's a pound. Thank you for the 10 pounds. I appreciate it. I'm not trying to trigger you, Tess. I legit I get it wrong every time, bro. I'm gonna literally get a little picture and put it on my desk. And every time I get a super chat internationally, I'm just gonna take a little peek there and be like, oh, thank you for the pounds. I appreciate it. I'm gonna have to get it right. All right, it's cool. Let's talk about some macro. We got a lot of stuff to talk about in the macro. They do not look similar, bro. They look so similar. It looks so similar. It's so weird. At least to me, it's weird. By the way, before we get into the macro, everyone's complaining about Tesla deliveries, but wait a second. Rivian just put out their numbers. I mean, come on, guys. Come on. This got to be a joke, right? 14,000 cars. Like, so like as much as we want to complain about Tesla, Rivian's up 5% on this number. Like there's not really, this is not a competition anymore. Okay. Rivian's doing barely 15,000 cars. Tesla's doing more than 20x that, right? And Rivian's not making a profit on any of these. Tesla's margins may not be the best, but Rivian does not make a gross profit. And they haven't done that for the past 5 years. So the street can complain all they want about deliveries when it comes to Tesla. No one else in the EV market is delivering as much as Tesla's doing. Okay, so let's talk about some macro stuff because we got a lot of different things going on in the macro. First off, we got to talk about China. China, I don't know if you guys saw the CSI index on China yesterday. It had not a good day. Not a good day. We didn't talk about it much on the show yesterday, but it was pretty bad. So it fell 2.9%, lowest since October 18th, marking the largest New Year's trading day decline in a decade. Okay. Additionally, China's 10-year government bond. So our 10-year in the United States is currently worth 4.559%, which is, we all want that to come down because it's pretty high, but 4.5%. China's 10-year just went to 1.6%. Last time their 10-year was at 4%. It was 2018. It was 6 years ago when they were even reaching somewhat of the levels about January 2018 that we are at right now. So their bond has hit a nasty level to the downside. And this is because on Friday, the central bank announced that it would prioritize interest rate adjustments over quantitative targets for loan growth. This initiative is in part of its broader interest rate reform program, which government advisors have described as an arduous task. And in late September, China's primary rate, the 7-day reverse repo rate, was cut from 1.7% to 1.5%, essentially allowing banks to give out more money, decrease their reserve ratio requirements, and hopefully increase loan originations, because if more people take out loans, then more people will start businesses, lend, buy cars, buy houses, et cetera, et cetera. So what's hilarious to me, and this is why I think the 10-year is going to fall in the United States of America, because who the hell is selling off the 10-year to buy the China 10-year? Who is selling United States debt? Because when you sell the 10-year, that's when the yield goes higher, to buy Chinese debt. It's like, how is that happening? But then someone in the comments actually said something really interesting yesterday. I didn't know this. The Chinese save 30% of their GDP, and the US probably saves 3% of their GDP. So China can pass on any rate to its domestic savers who also can't move their money abroad. Whereas in the US, you can move your money anywhere, and the pool of savings is low, as most folks are unable to save. So domestic household savings that can't move money abroad, where do they put money in? Either Alibaba, real estate, but China's real estate market has gone down by 18 trillion over the past couple of years, so that's not been really good. Or what's left? The 10-year. The freaking 10-year, right? There's either stocks, which have not done well in China. There's either real estate, which has done horrible in China, or it's bonds. So from that perspective, it gives you a good understanding that not only is the government buying their bonds, but obviously you've got investors in China that the best they can get is, in some cases, a 10-year bond. Now, Bitcoin is one of those things, but China's kind of banned Bitcoin, kind of hasn't banned Bitcoin. So Bitcoin is one of those things that you're going to have to be very, it's going to be tricky to be able to buy. You can't just like log on to Robinhood or Coinbase in China to get Bitcoin. But as you can see right here, China's economic challenges in regards to the deconstruction of household wealth is $18 trillion since 2021 with the country's property meltdown. So from that perspective, China's struggling. China's bad. They've got to stimulate. That's actually kind of bullish for the global economy, because if China's stimulating, that should be good for global equities. That should get more liquidity into the system. That should theoretically have some downstream effects on Bitcoin. But the point is, I think the US 10-year trading at 3 times the China 10-year, when in reality, US debt is probably better than Chinese debt. At least I would say US debt is probably better. I think we should get some buyers for that 10-year eventually, but it really all depends not on this analysis around the Chinese 10-year. It depends on January 15th. Why January 15th? Because that's when we get CPI data. And if that CPI data is hot, this 10-year is going higher, unfortunately. So look, my analysis is I think the 10-year should be coming down eventually, and definitely, in the next 6 months, the first half of 2025, I think it meaningfully comes down, which is really good for equities because you don't want a 10-year that's competitive with stocks. Like you don't want people being like, I should sell Meta to buy the 10-year. Like it's like no, like you should buy Meta because you believe in American exceptionalism and capitalism, and then Meta is going to be a good company, right? Or replace Meta with any other amazing stock in the stock. Like you should feel comfortable buying that over the 10-year. But right now, the 10-year is offering you 4.5%, and you're like, well, maybe I don't need to take the risk of trusting Zuckerberg and having them grow users. I mean, yeah, I can just trust in the U.S.'s debt because I know the U.S. is never going to default on it, and that's my risk-free return. Or just put it in a money market fund, right? So we need that 10-year to come down. It's going to be coming down on inflation expectations, but we need to see if inflation actually comes down going into January as well. What do we have in the pre-market? Sofi is up 1%. Not bad. I think those puts I sold, hopefully I got the bottom, and that's going to be a great trade to start 2025 with those 1350 puts. So let's see if Sofi can rebound. Tesla as well, up about 0.5% in the pre-markets, 381. That's not bad on Tessie. Robinhood, 39.78. Robinhood looks like it wants 40 so bad. Oh, Vlad did sell 750,000 shares of Robinhood yesterday. We did have some insider selling at Palantir as well. I think it amounted to like a couple 100,000 shares across all the directors, none by Karp or Sham or anyone like that, but some of the other C-suites sold shares. And then Vlad sold 750,000 shares. Now, what's interesting, two things. A, I think he deserves it, right? I mean, stock's up 200% in a year. Like that's when you want your CEO to actually take profits, right? Not when the stock is down 50%. So I think he performed very well, got the stock to a new level. It makes sense that he's taking profits. Number two, the stock was up 6% yesterday, even with Vlad selling $30 million of it. And he got it at a 37.26 average. If he had waited a couple hours, he would have got it at 39. So whoever bought those 750,000 shares was already up 6% on them by the end of the day. And it just looks like the momentum on Robinhood is very strong, even though the rest of fintech has not been that good to start 2025. Robinhood kind of being in its own league right here. They did get an upgrade by Piper Sandler to $54 yesterday as well, increased their EPS estimates. So it does look like Robinhood will have a very strong Q4 as well. Okay, what else do we have in the pre-market? Celsius is up about 1%. Google's up 0.5%. Reddit's up 0.5%. Shopify is up a little bit. Grab is up 1%. Archer Aviation's up 1%. Wow, everything's red. Carvana is down 5% on that Hindenburg report. Haven't read it yet, but some people that I talked to that did read the report, they think this is worse than SMCI. Now, take that with a grain of salt, right? That's what some people are saying. That's not what I'm saying because I haven't read the report. But apparently, the argument in Hindenburg stems on the idea that the accounting in Carvana is so bad that it makes SMCI look like a joke in terms of how they're cooking the books. I mean, I guess we'll see, right? Right now, it's down 5%. The market's definitely paying attention right now. Yesterday, they kind of waved it off. Looks like that short report is getting some more excitement. That would be a sad story because Carvana, like, made a lot of people rich. $40 billion market cap. I mean, it was up 1,000% over the past couple of years. So for that to all be a fraud is just like, I don't think that's just good for the stock market because you don't want companies that are, creating that much wealth that do it on a lie. But that might be the case with Carvana. We got to do some more research on that. That one is down 5% right here. Currently in the pre-market. Square, how's Square doing? We got the market open in 5 minutes. Square is up 4%. That's not bad. Look at INQQ, the India Internet ETF that I wanted to buy. That's up 5% as well. I haven't bought it yet, but that's at 4.92%. By the way, guys, all right, let me see. I'm going to do what you guys say. So I'm going to put a poll in the chat. Let's see what you guys say. I am officially ready to buy my first share of the S&P 500. So I'm going to do it today based on the yeses or nos in the chat. Let's see what you guys say. I was talking to Steve yesterday. I was like, Steve, should I buy my first share of the S&P 500? He was like, yes, it's time. You need to start saving for retirement. I was like, yeah, but like, what if it comes down? I can get a better price. He's like, no, that's not how it works. You buy the S&P and you never worry about the price. I was like, yeah, but what if it comes down? I can get a better price. So I was just messing with Steve. But I'm going to, whatever the poll says, we'll look at the poll in like 30 minutes and let's see what you guys say, yes or no, on do I buy my first share of the S&P 500. Keep in mind, the S&P, that's like 5 shares of Palantir. I'm just saying. It's like we're buying the S&P. We're foregoing some more allocation to Palantir. So just keep that in mind as you vote. But no, in general, I do want to start buying the S&P. I mean, I should probably start at this stage of life. I'm 27. I should own a little bit of America in and of itself. So yeah, based on what the poll says today, we'll see if we buy the first share of the S&P. NVIDIA's at 140, folks, in the pre-markets. By the way, everything's getting really green. Robinhood's up 1%, SoFi's up 1%, Tesla's up 1%, NVIDIA 5, Rivian's up 5, S&P's up 0.5%, Square's up 4%. Everything's going really green. I don't know what happened in like the past 2 minutes, but this is definitely a little bit of a switch from 8:30 when things were like slightly green, slightly red. Hims is up 1%, Marathon's up 1%, CleanSpark's up 0.5%, Coinbase is up, Netflix is up. Either this is a little bit of a setup into a dump, or we reverse on Friday from some of the lows we've seen at the end of December. Look at Bitcoin. Bitcoin back above 97. This is really green 3 minutes before into the market open. I don't really trust it yet because we saw this. What was it? We saw this on Monday. Yeah, we saw this on Monday. It was either Monday or Tuesday where it was really green, and then and then we saw what happened. It reversed really badly. So let's see kind of how this momentum can carry on into the 9:30 a.m. market session. Derek says, admit buy puts in the QQQ. Do not buy a call in the S&P 500. Yeah, Derek is definitely bearish. Derek thinks this market is taking a hit. The thing is, again, it's only January 3rd. We have so much time left, and I think everyone has to be just a little bit more patient just to see kind of how this ends up playing out. But we will find out soon. We will definitely find out soon how this market wants to go, especially after Trump gets inaugurated, and see how the market's thinking about this as well. Okay, we got 2 minutes left. What does the poll say so far? What does the poll say? Is the poll saying buy? Wow, we got 65% of you saying buy the S&P. 65% of you saying admit. Time to allocate to the S&P 500. Oh, how about Farcoin? Yeah, let's check Farcoin before we open. If the market's blistering green, I would imagine Farcoin's up. Yeah, of course. Why not? Farcoin's up another 9%. Of course. Why not? Dude, I don't think we can downplay the level of persistence that the Fartcoin community has to this coin. And I've been downplaying it. I've been saying it's going to crash. It's full of shit. It's not going anywhere. I've been wrong, obviously. Fartcoin's been stinking up the joint. I mean, they've been doing well. They've been doing great. So whoever is part of the Fartcoin community with 1 billion Fartcoins circulating, it's not like it's a small float or anything. It's basically imagine 1 billion shares that are out there for a stock. There have been buyers. There have been plenty of buyers. That thing is up a lot over the year, and it's up another 10% today. It was up 40% yesterday. It was up 40% yesterday. So Fartcoin continues to do well. All right, we got 8 seconds until the market opens. We are working on fixing the bell issue, hopefully over the weekend. Until then, ladies and gentlemen, 9:30 a.m. Friday, January 3rd, the stock market is now open. Again, this is so embarrassing. It's so embarrassing. We're going to get the bell eventually. But here we go. Stock market's open. Bitcoin, 96,939. S&P 500 up 0.5%. Not bad on the S&P 500. Up 0.5% today. Rivian's up 4%. NVIDIA's up 1.32%. Look at NVIDIA run back into the 140s. Where's Tessie? Tessie's at 380. We have some strength on Tesla. It is, we got a red candle, even though we're still green on the day. So we got to see kind of how Tesla now slightly green. We're still at 380, just went to 379, but we still are at 380, down from 383, but we are at 380. Tesla's green. Sofi up 1%. This makes sense. Sofi should never have been down 10% yesterday. Sofi right here at 1420. Robin at 39.59. That's up about 0.5%. Pound here 75.60. That's up about 0.5%. INQQ, that got dumped. That was up 5%. Now it's up 0.3%. That makes sense. It made no sense for it to be up 5% in the pre-markets. So that one got dumped. Celsius is up 1%. Google's up 1.2%. Reddit's up 1.5%. So Shopify's up 1.5%. Coinbase is up 1.7%. Is Tesla down? No, Tesla's green. 381. Tesla's up 0.5%. Sofi, look at Sofi. Go 1.7. Whoa, Sofi. 1440. 1440 on Sofi. Look at Grab, or not Grab. Square's up 5%. Grab is down, I think. Grab is down 1.3%. Okay, so Grab's getting dumped right here. 460, and that's probably because that dollar is not going any lower. I don't mind Grab going down again. I don't have my full position. If we get into the low fours, I kind of would be very happy. I would get to buy more shares. So that's the way I'm thinking of Grab, more as a long-term thing. And if I would get them much cheaper at $4, I'd be happy. But let's see if it can actually get all the way down there if that dollar keeps going higher. NVIDIA, 141. Holy crap. NVIDIA is not stopping at all. Tesla's not stopping either. Palantir is up 1%. Tesla, 383. That's up 1.14. The entire market going green right here, folks. Pretty much the entire market. Faraday Future is down 15%. That's a good sign. Carvana is down 5%. That's off the short report. Gold is down about 1/3%. SolarEdge is down 0.5%. Carnival Cruise down a little bit. IBIT's down a little bit. Apple still down a little bit. Grinders at $18. Small caps are up. GameStop's up a little bit. Small caps up 0.5%. Costco up 0.5%. Joby's up 2%. Palantir's up 1.3%. S&P is trying to make its way back to 590. And then you got Tessie right here up 1% at 383 currently right now. Where's Rocket Lab? RKLB. Rocket Lab, 2553. Rocket Lab's up 2.2%. All right, so we got a green Friday. Looks like we got a green Friday. I mean, so far, maybe we get a little bit of a rug pull, but at 9:33, 3 minutes into it, it looks like we have a relatively green Friday. Nothing's too crazy. Rivian's up 9% on delivering 15,000 cars, which is a little bit less than Tesla's 500,000 cars. But still, they are up. AMD is down. Is AMD down? AMD is indeed down. Oh, no, AMD's up. AMD's up 1.6%. AMD's up. Next target to buy Grab is probably in the 450s. Probably in the 450s. Because right now at 470, I don't really think this is a dip from 475 where it's been chilling at for a while. So if we get into the 450s, that's my next target to acquire. And look, there's a good chance we can get there simply because of the dollar. It's not because of Grab's execution. It's not because I think they're overvalued. 32% of the company is cash. So you're realistically, you're paying about $3.20 per share for the actual company. But that dollar going up is a massive headwind internationally. And so that's something that Trump's going to have to help us get down. Nubank's up 1.4%. Nubank doing really well after being up 2% yesterday. And Mercado Libre, that one as well is up 2% currently right now. Robin at 39.65, Tesla 383. Tesla is showing decent strength. I mean, it's not letting go of the 380s. That's a good thing. But Tesla currently at 383, trying to make its way back to 384.5, up 1.2%. Hood 39.60. Sofi showing great strength today, 14.36. Made no sense for it to be at 13.90 yesterday, so that is doing very well. Reddit back into the 170, Shopify 109, Google at 193. Interesting. So it looks like this whole conversation around valuations being expensive and being extended, at least that was the conversation on the first day of the market open yesterday for 2025. That conversation is kind of getting thrown out the window right now as markets are going higher and people are buying at these valuations. Next decade up another 1%. This was up 15% over the past 2 days. ASML is up 1%. Uber, look at that, up another 2%. Uber was up 4% yesterday. Uber's doing great. Archer's up 7%. Wow. Are we back to a bull market, folks? Are we back to a bull market? Archer up 8%. Goodness, this is not bad. Jason says, wait 30 minutes to an hour for a dump. Maybe it's only been 5 minutes, but it looks pretty damn green. It looks pretty damn green. Do you have grab leaps? Yes, I have grab leaps. 2027 for that $10 strike, which I think they can get there in 2 years. But again, it'll take them time. This is going to be a slow mover, but the thesis is very, very strong on them long term. Also, their institutional holdings is really good. It's like 65%. So this is not a retail-driven stock. And the institutions will continue buying, but they just need to see earnings growth. Which means I think late February they have their earnings. That's when we'll see how they did for Q4. Qs are up 0.5% right now, or up almost 1%. MSTX is up about 3%. Affirm's up 1.5%. Walmart's up 1%. Lyft, which were rumors Amazon was going to buy them yesterday. A little bit of a misheadline because it was a prediction from a website, not really a rumor that Amazon was going to buy them. But they're up 1.6%. They were up 5% yesterday. Kava's down about 0.5%. Microsoft got upgraded to $500 today. They're up a little bit right now. Color's up 6%. Apple had its worst day since October yesterday, down 2.5%. It's down another 1% right here. I think the street's kind of questioning where is the upgrade cycle for Apple, and that's why they're not giving Apple too much love. It's kind of random that they woke up January 2nd. They were like, yeah, there's no upgrade cycle. We're going to sell off Apple. But I think that's what's happening right now when it comes to Apple. So Apple right here down about 0.67%. as we get into the market open. HIMS is up 1.54. Where's Tessie? Is Tessie holding on? Is she holding on? She's holding on, not going above 383, but holding the 380s, which I think is a win. If we can end the day at 380, that's a win on Tesla. Just not going below that 375 range, I think would be productive for Tesla at this state of how the market's thinking about it, especially with earnings coming up. Astrobots on Microsoft today. Okay. QSI. So I don't know too much about QSI. Is that one up today? Yeah, that one's up 20%. This is another quantum name. Guys, I know nothing about this. I have not done any due diligence on quantum. So whatever I say about quantum, you have to take with a grain of salt because I don't know anything about it. But that one's up 18%. Another small cap, $722 million market cap. So quantum as a industry, as a thematic, is definitely getting some love. Palantir as well. Look at that. It's 2.3%, baby. I put out a video yesterday, my top 7 moments for Palantir in 2025, 2024. Let's see if I can remember them. The top 7 moments were S&P inclusion, NASDAQ inclusion, Elon Musk developing his relationship with Palantir by following him, the Anduril, SpaceX, all that stuff that we talked about last week. Dan Ives and his upgrades on Palantir. To me, that was a big moment of 2024 because he consistently upgraded them and he has a big voice on the street. AIPCon, Palantir hosted 3 AIPCons. And then I had 2 more moments. I'm forgetting the last one, but the other one was 30% revenue growth. The fact that Palantir got back to 30% revenue growth to me was very, very bullish. And that was in my top 7 moments for the year when it came to Palantir. What was that last? Going viral. Yeah, Carp had a bunch of clips that went viral. So that was in my top 7 moments. So overall, I mean, look at Palantir, 77. Palantir had an incredible 2024. I mean, I could have had 20 moments instead of 7 moments, but like really, really amazing milestones for the company. S&P inclusion was my number 1 milestone because, Palantir was a company that was never supposed to get into the S&P. They got into the S&P. 77.28, up 2.7%. Look at Rocket Lab run as well. 6.75% on Rocket Lab. That one's showing some momentum. Almost up 7%. Archer's up 12 freaking percent right now. Mercado's up 2%, Nubank's up 2%, AMD's up 2%, and then NVIDIA, are we above 142? NVIDIA's at 141.70. Hood's at 40? Okay, back to the 40s. Back to the 40s. It's been a couple weeks since we've been here. We need to start normalizing these 40s for Robinhood. Hopefully we can hold on to it and maintain it over the next couple weeks, even with some volatility. Bitcoin right here, 97,000. Look at Sofi, bro. Look at Sofi. I mean, dude, I don't want to give myself a pat on the back, but I really like the trade I made yesterday. Selling those 1350 puts was just like a great trade, in my opinion. We're already up 15% on those. I mean, that was one of those where I felt it was stupid, absolutely stupid for Sofi to be trading at 1390. Like if there was an earnings release, a fundamental reason, I would have respected it more. But KBW, who the hell is KBW? They're the ones that are going to take Sofi. Get out of here, bro. Come on. And those are amazing moments to sell put. I mean, those are the days where you step in and you take a little bit more of risk because you just believe you're right against what some random Wall Street firm is talking about. So whoever bought the dip on Sofi yesterday, congrats as well. If you bought some calls on Sofi, congrats. I mean, unless we get a major reversal here, it looks like Sofi is nicely recovering from that downgrade. Tesla, wow, 387. Look at that. Tesla moving up, maybe back into the 390s right here, up 2%. Looks like the street's not caring too much about the deliveries right now. They cared yesterday, today, along with the rest of the market. They are not caring. PayPal's up 1.4%. Dutch Bros up 2%. Affirm's up 1.8%. MSTX is up 5%. Walmart's up a little bit. Lyft is up 1.5%. And then Palantir's up 3%. Palantir's trying to go back to 78, 77.5. NVIDIA's at 142. There you go. Wow, what a green day, huh? What a green day, at least in the first 10 minutes. All right, let's do a new poll. Let's see if you guys think we're getting a rug pull. Let's see. Did the S&P 500 poll win? Do I have to buy a share of the S&P 500? Steve will be so happy when I text him a picture of me having bought the S&P 500. Did it win? Yes, 64.36. All right, folks. Looks like we're gonna have to buy the S&P 500. Looks like we're gonna have to buy it. So here's the poll: rug pull coming or not? Let's see what you guys think if we're getting a rug pull. NVIDIA 142. Where's the Bitcoin stocks? Let's take a look at Bitcoin. They're all green. Marathon's up, Riot's up, Hut's up, Iren's up, Cypher's up, MSTR is up, Bitfarms is up, Bitcoin's up, CleanSpark's up, Coinbase is up. All of them are green. Now, all of them took a big schlacking over the past 2 weeks, so they're recovering, kind of. Marathon is still down pretty badly. Same with MSTR, but they're headed in the right direction, which is a good thing. And then Robinhood, nicely above 40 right here. I mean, barely above 40, but still nice to see a 4 handle on Robinhood. We got to see if we can continue going higher. Barcoin's up 8% again. Oh my gosh, dude. I mean, it goes to show we're in a bull market. Yeah, you're right. Farcoin's up 8%. There you go. There you go. It's up another 8% after you bought 5 minutes ago. There were ETF outflows. Yes, there were tons of ETF outflows on the Bitcoin ETFs yesterday. BlackRock in particular sold 3,500 Bitcoin, but I guess it doesn't matter because people are buying Bitcoin today outside of the ETF, and that's what's allowing Bitcoin to continue maintaining its momentum. Palantir up 3.4%. We hit 77.93, maybe making our way back into the 78s. Bitcoin 97, SoFi 14, 30, Tesla 386, uranium ETF URA 2865. That's up 1.92%. Google's at 193. Reddit's at 174. Reddit's up another 5%, dude. Reddit, I feel like should come back to the 120s, but I don't think it's going to come back to the 120s. I want to buy it. I think there is a real moat around Reddit. Problem is, I feel like it's kind of expensive, but then again, that's a lot of these different names. Shopify as well, 109. That's up 1.5%. Carvana is still getting hit from that short report, down 5.5% from Hindenburg. So that one not recovering too well. And PayPal up 1.4%. The honey PayPal thing was a joke. I mean, if you sold your PayPal because of the honey scandal, that just really wasn't the best move. That looks like it's not going to be affecting PayPal at all. So that was like a viral video that really has no impact on the bottom line of the business. But PayPal still going up about 1% to start off the year. Snapchat's up. Well, if Snapchat's up, that means the market might be thinking TikTok's getting banned. That's my analysis on why Snapchat could be going up. Look, I think Meta is the main beneficiary of TikTok getting banned, but if Snapchat, it wouldn't hurt Snapchat if TikTok gets banned. But maybe that's the market thinking that will get some more added users for Snapchat. Intel, where's Intel? How's Intel doing today? Intel, and then we'll look at the semis. Intel, wow, Intel is green, not crazy green, but it is green. AMD is up 1.8. Let's look at the semis. We'll have Jose on in a little bit to talk semis as well. All green. AMD, NVIDIA's trying to go for 143. Wow, NVIDIA was at 126 less than 2 weeks ago. 7 days ago. Now we're at 142. So nice reversal on NVIDIA. Marvell's up 3.5%. ARM's up 3%. Lam Research is up 2%. Dell's up 3%. ASML's up 1%. Broadcom's up 2%. SMCI's up 2%. AMD's up 2%. Everything is green in the semis. Everything is green in crypto. Everything is green in fintech. Coinbase, Square, PayPal, Affirm, SoFi, Robinhood. Everything's green in the Mag 7. Literally, even Apple just turned green. It's a green day. It's a green day. Grab is down. Yes, Grab is the only one that's down. There's some other names that are down, but Grab is one of the ones that's down. But outside of that, we do have green. Teladoc's down. United Airlines down a little bit. Nike continues to go down. Let's see, Berkshire. Our value stocks down today. Berkshire slightly green, even though we do have some value names that are down. Coca-Cola is down on the day. But overall, growth is winning today. Growth is really winning today. And it's weird because it's a Friday. You tend to not see that much love on a Friday, but it looks like we're getting it. What did you guys say on the rug pull? Let's see. No. Okay. 57% say no on the rug pull. 42% say yes. We'll know for sure by 10:30. By 10:30, we will know for sure if this rug pull thing is real or not. So far, it looks like a lot of strength. We're not really even seeing major red candles. Not anywhere I can see. Enovix, let's see Enovix right now as well. Enovix 12.20. Yeah, Enovix doing well from $9. These guys went to 18 last year, then they fell all the way to 7, so they're having a nice recovery. Again, Enovix is basically a startup that's public, even though they're doing really good things in the battery tech world. It's just you're buying potential more than earnings on Enovix, which is fair because there's other companies out there that also have potential that have done very well, right? Archer up 13% right here. That's buying potential. Oklo buying potential. Oklo is up 6% today. I mean, the fact that Oklo and Archer are up as much as they are, along with the Novix, means that we've got some money entering markets right now. We've got some money coming into markets. Bitcoin right here at 97,000. Let's look at the quantum names too. Quantum names, Rigetti is down 1.5. Google's up a little bit. Quantum computing down. IONQ is up 8%. And then D-Wave is up 0.5%. Let's add QSI to this list. QSI is up 20%. So quantum as well, getting a little bit of love this morning. ISM data released in 15 minutes. Okay, let me pull that up. Is that for let's see exactly which one that is. ISM 10 a.m. We're getting that. Oh, manufacturing PMI. Okay, that's a big one. Yeah, and employment. All right, so at 15 minutes, we're going to get some ISM data. That'll be really important. That could kind of halt the rally or keep it going. We've been doing good on beats when it comes to ISM manufacturing. That just gives us a sense of how much the economy is contracting or expanding. So that's going to be important. Non-farm payrolls are today? Or are they next week? Are they today? No, they're not today, right? I don't think they're today. I think they're next Friday. Non-farm payrolls. Even though technically it's the first Friday of the month, right? Today's the first Friday of the month. But I don't think it's today. I think it's next Friday. Yeah, so that jobs report, that's going to matter as well. Yeah, January 10th. Okay, that one's going to be important. And then January 15th, we have CPI. So January 10th, we're going to be looking at that one. Non-farm payrolls. Well, if you believe the jobs aren't real, then yeah, that is potentially fair. All right, we're getting a little bit of weakness, folks. Tesla going back to 385. Sofi coming from 1440 to 1420. S&P going from 589 to 587. Nvidia, where is Nvidia? Nvidia was at 142.70. Now it's at 142.50. Very little bit of weakness. Nvidia did hit 143 for a second. Robinhood just went red. That went from 40 to 39.40. Dude, we better not get a rug pull. We better not get a rug pull. Oh my gosh. It is a Friday, though. It is a Friday. It is a Friday. It's always a Friday. You never know on a Friday, bro. You just never know. Especially because the past 5 days have been red. So to reverse that would take a decent amount of momentum. And on that momentum can happen, but on a Friday, you don't tend to get that momentum. Like, it's just not easy to get it. But let's see. We're not super red yet. Palantir right here falling as well from 78 to 77.20. So you got red candles across the board, even though they're not taking stocks down fully, but they are giving us a little bit of a peak of some red. Let's see. Rocket Lab's still up. Yeah, Rocket Lab is still up right here. Rocket Lab. Wow, Rocket Lab. Yeah, Rocket Lab, very small red candle, but that's up 7%, which is pretty incredible. Not bad on Rocket Lab. We made a lower low yesterday on the SPY. That is correct. Look, the biggest problem right now, I think, with why we can't get a sustained, like, super good bull run, there's two things. Number one, 2024, we already had it, right? I think we do have to be very, very cognizant of the fact that 2024 was amazing. But number two is that the street's still obsessed with this idea that large cap valuations are too high. And as long as that is the narrative, which that definitely is the narrative right now, the volatility around that narrative is not going to allow markets to take, Google or Amazon up another 10, 15%, especially without earnings growth, which, we haven't really seen yet because we haven't had earnings. So, I mean, the volatility in any of the red that we see over the next couple of weeks, it shouldn't be a surprise. And I don't think it's been a surprise to anybody. Everyone's known we've been up a lot. Like, most people have been expecting some red. But it's just one of those things where it's like, can 2025 defy the odds? Can 2025 actually give us 3 back-to-back super green years? We're going to have to see. We're going to have to see if that can really actually happen. What do you think of RDW? I'm still doing some work on that one. It's like a mini Rocket Lab competitor. That's up 5.8%. It's in the space arena. Still looking at it. I saw this stock at $13 and I didn't really look that deep into it. Like, I knew a little bit about it. It was 2 weeks ago I was looking at it. Or I think it was a month ago I was looking at it. But just never took it that seriously, never really looked into it. But now at 18, not bad for anyone who got into it. You are up pretty nicely. It is a small cap, though. It's $1 billion market cap. So it is small. NVIDIA right there, 142.99, right back to 143. Archer's up 11%. NVIDIA trying to go up to the mid 140s here right now. Will you ever enter NEO again? Probably not. I mean, I don't know what's the bull case on NEO. It's an EV company in China. A, China is a bear case. B, like if there's any EV company I would want, it's Tesla, not NEO, right? So I think NEO as a trade could make sense in certain areas, but I don't know, not really NEO as an investment. I know their battery swap technology is interesting. I know that their vehicle deliveries are not horrible. I know that their valuation is somewhat attractive, but I don't know. I just rather not trust in a Chinese EV company to go to the moon. What else we have? All right, let's see some other headlines. So we have the data in 8 minutes on ISM. That's going to be important. Let me see what other moves we're seeing right now in the market. We are definitely super green. Rivian's up 14,000 vehicles versus 13,000. So that's a beat. That's why Rivian's up 15%. We did have Biden blocking the U.S. steel sale to Nippon Steel. So that was going to be sold, ticker symbol X, U.S. Steel. That's down 8%. They were going to be sold to a Japanese company. Biden blocked it because he does not want those jobs to go away. The company's argument is, hey, to keep any jobs, we have to actually, have this acquisition happen. But one of Biden's last moves is going to be to not allow that to go through. So that's another thing we're looking at. We do have an upgrade on Amazon as well. Wolf Research raised their price target from 250 to 270 on Amazon. They wrote, we named Amazon as a top pick of 2025 at the time of our launch in July 2024, and we remain constructive based on our three-pronged thesis. Number one, upside to resale margins driven by operational efficiency gains, automation, ad revenue growth, and sustainable international profitability. Two, healthy, sustainable AWS revenue growth in the high teens range driven by demand for AI-based workloads and inference, Trainium trips, and Anthropic. And three, ongoing market share consolidation driven by fast delivery speeds and availability of non-discretionary items. Really, the thesis right here is AWS and operating margins going up. If those two sustain themselves, and if Mr. Bezos doesn't keep selling, then Amazon probably goes higher if the macro holds up. But that is going to be what the street looks for Amazon. They have a $270 price target for Amazon by the end of this year. NVIDIA, 143.20. NVIDIA looks like it's outperforming the rest of the market right here, kind of going on its own tear. Tesla, 386, still trying to hold on to the 380s. NVIDIA, 143. Rocket Lab, 9.5%. Holy crap. Rocket Lab's up. Rocket Lab is up 9%. Not bad. Open Door, I do not like because their margins suck. I am sympathetic that this could be a good play. Open Door's down 1% when rates come down in the housing market. But if you take a look at their gross margins, it's really bad. They can't make a profit. And even in 2021, when the housing market was crazy, they couldn't make a profit. Or if they made a profit, it was like 7%. It was like they did like $30 billion in revenue and like $100 million in profit. So, I mean, Open Door is just not an exciting one given their profit profile, but I do think they could rally just based off like real estate, housing market boom, mortgage rates coming down. The problem is I think there's other plays that could benefit from that. Like I think Zillow might do a little bit better than an Open Door. Granted, Open Door is trading half at cash, right? The valuation is extremely depressed, but it's not the most exciting name. Lennar is another one that's exciting if the housing market actually comes back, but that relies on the 10-year as well. ISM is manufacturing data, Alec. That'll come out in 5 minutes. So we got 5 minutes to watch that data. That's basically giving you a grasp of how many goods and services the United States is producing, exporting, importing, etc., manufacturing. And if it's higher than 50, it means we're expanding. If it's lower than 50, we're contracting. We've been lower than 50 for the past couple months now, but it's been increasing even though it's been lower than 50. So as long as that comes in at around 48.5, 49, that is going to be really good for us. So we got 5 minutes for that ISM data. Adobe's dumping. Tesla 387. Ooh, Adobe, dude. Adobe's been a disaster. Adobe's been such a disaster. I should have gone short Adobe, bro. Because my thesis on Adobe for the past year, my bear thesis has been completely correct. I mean, like ever since I heard their Q3 2024 earnings call, I was like, this company sucks, bro. Like there's even the way they did their call, down 25% in the past 6 months. I think they're lying about they're not lying. I shouldn't say that, but they're overstating the momentum they can get from generative AI. I don't think it's going to be a tailwind for Adobe as much as Adobe thinks it's going to be, especially with competitors like Canva and Figma. B, I don't like the CEO. I don't like how he's really running the business. I really don't like how he talks to analysts. He's kind of a dick to analysts. And that already, like on earnings calls, that's like, I don't know. That's not really fun to hear from your CEO. And then B, it's just like, dude, why in the AI software revolution, like what, like typing in a word and then getting a random image that pops up when OpenAI, Gemini can do the same thing? That can't be Adobe's moat. They can't say, oh, generative AI means people are going to start using our software more to like come up with AI based images. It's like, well, everyone's going to like eventually Siri will be able to do that. So granted, now that the valuations is where it is, under $200 billion, Adobe's still a really good company, even if their earnings growth hasn't been good. This could be an opportunity. I don't think it's the time to short them anymore. But when they were at $550, yeah, that was the time where Adobe probably wasn't on the best path. 3 minutes until ISM data. We'll take a look at that in about 3 minutes, and we'll see what's happening there. Good day to add Grab. Is Grab still struggling? Are we still below 470? Wow, 465. Yeah, I'll be adding Grab today. I will definitely be adding Grab today. I mean, look, 450 is when I would really get excited for Grab, but I'll probably add like 100 shares today. Nothing too crazy. Down about 1.79% here. I don't know really why it's down outside of the high US dollar. It could just be a little bit of a dump before earnings as well, people taking profits. But that one is down, and the dollar, I think, does have a decent amount to do with it. Rocket Lab right here up 9%. Also, Tesla looking like it's trying to make its way to 390. So Tesla and NVIDIA rebounding for the day. NVIDIA, wow, 143.8. NVIDIA's up basically $200 billion in market cap. A 4% day on NVIDIA is a big day for NVIDIA. That's up, trying to get to 144. Palantir is 76. So Palantir still up 2%. Was at 78. Now currently at 76 at these levels. I wouldn't do the Grab $10 call for July. I mean, look, I tend to do leaps. I don't tend to do short-term options. I mean, it could go up if Grab gets to like $6-7, right? That $10 call could be worth more, but Grab would have to move really quickly in a short amount of time. So if you're looking at the $10 call, I like January 2027. If you really want to be conservative, wait for a month. The December 2027 options are going to be out, and then you can really buy some time and let the sort of thesis play out. So I don't think anyone has to rush into this one at all. This one's going to take time. Oklow's running as well. Yep, Oklow having some good love. Dan Ives is bullish on Oklow. He came on the show a couple of weeks ago and said Oklow is the energy play that he's going with. So this one's up 10% right here. NVIDIA trying to break 144, and then Palantir up 2.3%. All right, ISM data. Let's transition over to that. We are going to get ISM data pretty soon. Let's see. This should be coming in pretty soon. The street is expecting about 48.4 consensus. So there you go. ISM manufacturing PMI, employment, new orders, and prices. All of these numbers we have to beat. 48.5, 48.3, 50.5, 50.4. Maybe it doesn't impact on the market. Maybe it doesn't. But we're going to see. We're going to see what the market thinks about this one. Fannie and Freddie up 12%, of course. Of course, after Mr. Bill Ackman. All right, we have 49.3 on manufacturing PMI. That's a beat. That's a beat. Manufacturing employment, 45.3. That's a miss. Manufacturing new orders, 52.5. That's a beat. And then manufacturing prices, 52.5 versus 50.4. That's a beat. So we got one miss on employment, which I think is kind of bearish. And we got two beats on PMI, which I think is pretty bullish, new orders and PMI. Let's see if the market's reacting to that at all. S&P, kind of red, a little bit of a red candle, not really that affected. Nothing too crazy. Very slight red candle, now going green. Yeah, it just went green. Just went green. Market didn't care. Looks like the market does not care about that one. Looks like the market does not care about that one. Kind of flat. It's not super green, not super red, but it is flat right here. Sofi at 14.19. That's up 0.5%. NVIDIA's up 3.8. Palantir 76.80. Yeah, market doesn't care too much. The unemployment number one, I don't know if that's a good thing. I don't know if that's a great thing that unemployment came in at 45.3 when the market wanted 48.3. I think that kind of means less jobs, if I'm not necessarily wrong, or at least not as much growth in jobs. But yeah, looks like the market's fine with it. Looks like the market doesn't care. Looks like the market doesn't care too much. Meet Kevin thinks Tesla will go to 318 and maybe mid 250s. Who agrees with me, Kevin? Who thinks Tesla goes to 320? I don't know if we get that low on Tesla, bro. Like, I think I don't know. Could that happen? Sure. But I don't know, bro. I don't think it'll be Tesla independently. I think the whole market's got to take a little bit of a hit for Tesla to get down there. Like, could that happen to Tesla? Yeah, but if the market goes down, that could happen. I don't know if Tesla's going to 320. Is it possible? Yeah. Is it possible? Yeah. Let me do a poll on that. Let's see what your guys' sentiment is on Tesla. Okay, so 54% of you said no rug pull is coming. We got 28 minutes left until the 10:30 slam, so we're gonna see. Okay, so my poll is: could Tesla go to 300 in the next 2 months? That's the poll. What do you think? Could Tesla go to 300 in the next 2 months? Or do you think it's likely for Tesla to go to 300 in the next 2 months? S&P 588, SoFi 1423, Tesla right here 387, a little bit down from 390, but still at 388 here right now. 360 Tesla's the key level. I agree. I think Jason also said 360, 365 from a technical perspective is the key level as well to watch out with. Right now, it's doing a good job holding up even with the crappy deliveries number. Remember, Tesla's not trading on anything fundamental in terms of deliveries or margins. It's all trading on narrative, right? And we know it's trading on narrative. So as long as the narrative stays afloat, I think Tesla does fine. And I don't think there's going to be anything that massive to hurt the narrative outside of a breakup with Trump, which it doesn't look like, him and Trump are breaking up anytime soon. So you're not paying $1 trillion for, deliveries. You're paying for a narrative. That narrative is intact right now. And that narrative really got a boost after Trump got elected. As long as that narrative stays afloat, I think we do okay on Tesla. Manufacturing PMI, let's get a little bit more info on that and see how the street's interpreting it. And then we'll keep going from there and see what's happening with Tesla.
Soaring, the EV maker meeting its 2024 vehicle production target after lowering projections. And then watch those alcohol-related stocks after America's Surgeon General called for cancer warnings on alcoholic beverages. According to the CDC, alcohol consumption is the third leading preventable cause of cancer in the United States after tobacco and obesity. Much more on the fallout coming up later on in the show. We do have some economic data crossing the tape right now. This is the ISM manufacturing number, comes in at 49.3. That was actually a little bit better than expected. Consensus was 48 and is also the highest in 9 months. December new orders, 52.5 versus 50.4 in November. So we're not quite at expansion level as far as the manufacturing industry. That would have to be a 50 or above number. We're at 49.3, but it's coming back in the right direction, Mike. And that's good news.
It is. And I mean, manufacturing has been at what normally in most cycles would be considered downturn readings for a long time. It's one of those sort of recession signals that was firing and really didn't play out. So definitely good news. I think the market does want reassurance that growth rates are pointing in the right direction. We're not looking for that kind of bad news as good news type dynamic, except for the impact on yields. And we actually do see yields perk up and turn higher on these numbers. So it's a little bit of a delicate balance here as we're trying to kind of find this equilibrium.
Well, what they're saying here is really important. So the ISM manufacturing data was good. That means the economy is expanding, not contracting. That's good. The problem is if the economy is expanding, that means people will be spending. If people are spending, that means we might have a little bit more sticky inflation. So this is why it's a delicate balance. The 10-year is up a little bit based on that ISM data. Now we're at 4.57, but it's still better than not that the economy is expanding versus contracting.
Equilibrium among equity valuations, what the Fed's going to do, market bond yields, the dollar, all this stuff kind of converging in new territory.
Well, if manufacturing is turning up, which has been stuck in the mud on the result of higher interest rates, that signals that the Fed might not have to cut as much in the year. And that's
another good point. And by the way, the CME probabilities, we looked at this yesterday. Take a look at this. 88% of market participants believe that we are not going to get a cut in January. Let me refresh and see if that changed. Yeah, it's still 88.8%. So the January cut, at least right now, is looking unlikely unless CPI falls off a cliff on January 15th.
What's been the primary mover of yields. Just wanted to throw in another economic chart for you, which is the updated forecast for GDP for the fourth quarter. It comes from the Atlanta Fed. We follow it because they update it in real time and put in place all these new inputs. And the latest is the private investment, which actually took the GDP number for the fourth quarter to 2.6. That's what we're tracking now from 3.1, which is what we were tracking, I don't know, last week or so, which is still higher than what Wall Street thinks. The blue chip consensus still are just hovering around that 2% level. But I highlight it because it's still pretty good. 2.6% growth in the fourth quarter. We're still coming off of a year where if you want to know why the market has had 2 back-to-back years of 20% plus returns, the first time we've seen that since the late 90s, right? You can look at growth becoming outperforming expectations.
Far better than expected.
And I do wonder if we're setting up for another year like that.
It's interesting. I mean, obviously, it's above trend growth, what people consider to be trend growth. A year ago, the economic consensus was that there was at least a 50% chance of a recession in 2024. Obviously, that was way too negative, way too skeptical. Now, currently, almost nobody expects a recession. You have it basically down at 20%, which is just your basic placeholder probability of a recession in any given year.
Are you saying that's too jubilant?
I don't, because I was looking back yesterday, and through the entire 2010s, there was not a high expectation of recession. I mean, didn't get a recession. So it's not purely contrary, but maybe it means the market's going to be a little bit tougher to please. The other thing is, and you and I have been out there pointing out, the economic surprise index rolling over. So it's, while the growth levels are strong based on Atlanta Fed, the data have not been coming in way ahead of estimates, and yet bond yields have been going up. So I think that's one of the reasons in December the equity market was a little bit uncomfortable, showing a lot of deferred profit taking, showing the cyclical sectors struggling a little bit. What that means right now, market's oversold. I mean,
because is the Fed pivoting into cautious mode at the time where the data's rolling over?
That's exactly right. And when yields are going to make the housing market tougher to actually recover even more. And that's a big potential driver of the economy. Again, though, the average stock has struggled for a few weeks, which means we have the makings for a relief bounce. I mean, we really should be bouncing here. The breath problem, yeah.
But some people look at that and they say that that's...
There you go. That's the equal weight S&P rolling over relative to the market cap weighted S&P. It's a 3-month chart, so we were great through November.
Is that bullish or bearish, though, that breath has been bad?
It's on a forward-going basis, it actually could be positive because it means that most of the market has had its pullback. We've reset expectations. I think you've taken some froth out of the market in December. You had a lot of speculative stuff going on. So some of that is...
Yeah, but that speculative stuff is still there, right? Farcoin is up 10% today. So, I mean, he's right. Definitely we got some froth out of the markets. We just had $100 billion enter money market funds over the past 2 weeks. But there still is some froth that we definitely can't ignore.
Has corrected itself. The problem is, if what that means is it's sending a message from the stock market that the economic fundamentals are tricky, or that the Fed is in the wrong spot, and that yields maybe cannot easily be absorbed at this level, then maybe it's going to be tougher to broaden out. That's all. But again, what it does mean.
And to his point, take a look at the fear and greed index. We're still in fear, folks. We're still in fear. And I think yesterday we were teetering on extreme fear. So it's not like the market has officially decided that we are way too expensive. We are still kind of in that zone where buying makes sense. I wonder what it would take for this to go to greed. Maybe like 6,100 on the S&P gets us into that greed range, potentially. But in this 5,800 range, we are still in the fear mode. Real quick look at equities, and then we'll have Jose join the show today. NVIDIA, almost 144. We touched 144 already, 143.9. That's up 4%. Sofi up 2%. S&P's up almost 1%. Palantir's up 3.5, looking like it's going back to 78. Grab is up. It was at 462. Now it's at 471. So a little bit of an increase from that bottom today. SoFi 1437. Tesla doing nice at 387. Open Doors up a little bit. Rocket Lab, nice 10% day on Rocket Lab. This one just has so much strength and momentum. Archer up 15%. Snapchat up 4%. Robinhood not back at 40 at 39.65, but still green. Nubank up 2%. AMD's up 2%. Coinbase up 2%. Square's up 5%. Overall, pretty strong day so far. We'll see in 20 minutes kind of what this 1030 market looks like. Maybe slam, maybe not, but it looks like the strength is there. It doesn't look as easily as if a rug pull is coming here on on Friday. And Rivian, great day. They beat Deliveries, although they only delivered 14,000 cars. The market expected 12,000. They're up 18% on this news as well. All right, folks, let's bring on one of our favorite analysts. Hasn't been on in about a week to talk about what's going on in the semiconductor ecosystem. Mr. Jose, what's up?
What's going on, man? Happy New Year's. Happy New Year's.
Happy New Year. How did you celebrate your New Year's Eve?
I actually fell asleep early. The wife and I, we were watching a movie, Carry On, I think.
Yes.
The little one fell asleep, and we just knocked out by like 10:30, 11. We were too tired.
So you didn't finish the movie?
No, definely not. Hopefully we'll finish it soon.
Okay, no, it was a crappy movie. I watched the movie. It was kind of crappy, but I
really? I keep hearing good things. All right.
maybe I'm just too harsh of a critic, dude. If it's not Christopher Nolan, I guess I'm just like, I don't like it. All right, so we got a lot of stuff coming up in 2025. I want to get your predictions and expectations for the semiconductor ecosystem. Guys, if you have questions, please put it in the chat. Well, let's start off with this. Jensen's talking on January 6th, next week at CES. What are your expectations? Is he going to say anything that we should care about? And how do you think it affects NVIDIA over the next few months?
So I think right now the market is definitely expecting a lot from this keynote. A few reasons, right? This is actually going to be one of the first keynotes in a few years where Jensen is going to CES. Usually when NVIDIA announces something in CES is either kind of like the executive of the consumer market, the executive of some of the consumer products, because CES is meant for the consumer world. But now that Jensen is actually going to do the keynote, I believe is creating a little bit more hype. Yesterday, we saw Bank of America analysts kind of explain some of the things the market is expecting. And I don't like to see that, right? Because if we don't get those expectations met, then we can definitely see kind of a pull decrease on the stock price after the event. Because, right, there's so much high expectations coming. What I'm expecting is first, a no-brainer. We're going to hear about their next generation consumer GPUs, the RTX 5000 line. That's a no-brainer. And if they announce it, I don't think it's going to move the stock in the right direction, in any real direction. The next, we're expected to hear more about the robotics market. Robotics, especially humanoid robotics, has definitely taken a huge bullish sentiment in the past year or so. And I think 2 days ago, we had an engineer from NVIDIA, Dr. Jim Fan, posted that he believes 2025 is going to be the year of robotics and every year after that. So usually in CES, we hear about the robotics market. Hopefully we hear more about that. So that one I'm also expecting. Now, two things that the market is expecting that I'm kind of worried about. The first is any updates on data center GPUs. Since this is a consumer market, we normally don't hear much about the data center space. Yep, Dr. Jim, I think 2 days ago, he mentioned about a little bit more about the robotics market. But data center GPUs, I think the market is expecting something during the keynote. I don't think we're going to get anything about that during the keynote. But the day after, there is going to be a fireside chat for Q&A analysts. Maybe we might hear more about that. So if you are an NVIDIA investor, be patient for January 7th as we get more updates during that session. And the final thing is NVIDIA is rumoredly to grow or expand into the CPU market, a market pretty much dominant by Intel and AMD in the consumer space.
Right.
Now, if they do this, I don't think it's going to be your traditional CPU. This is one I think it's 50-50. If they do this, I don't think it's going to be an individual CPU. I think it's going to be very similar to how they have their data center market, where it's a combo where it's a CPU and the GPU. And they're trying to find small niches with high margins that need to use all the last drop of the power of their consumer GPUs. So maybe things like AI scientists, AI engineers, companies that have laptops that do a lot of these accelerating workloads. So that one's going to be interesting. If they do enter that space, I think that's going to be very bullish for NVIDIA. I think it could create bearish sentiments for companies like Intel and AMD if they announce that. And it could be a bullish sentiment for ARM if they announce, because it's most likely going to be an ARM CPU based architecture. So it's going to be an interesting one. Usually there's so much expectations, we might just end up hearing about the GPUs and that's it.
So let's transition this into a conversation about AMD, which my first question is, why is NVIDIA trying to get into the CPU business? Is because they're just trying to get more growth?
I don't think it's that they have more growth. I think Nvidia only enters something when they believe their products aren't being shown, aren't being used to the full extent. And if you're like a gamer and or you're something, some products are usually limited by your CPU, your bottleneck by your CPU. When you're working on those high kind of accelerating solutions. Now, that's why I think the only reason NVIDIA would want to enter the CPU is to be able to eliminate that bottleneck that maybe x86 CPUs create, where if you use NVIDIA CPU and an NVIDIA GPU, your performance in those AI workloads, your performance on those other workloads that use highly accelerating computational needs are going to grow even higher. So that's where I think they're going to focus within that niche, not necessarily the whole consumer space.
Okay, so having said that, AMD, do you think we're bottoming here? And what is the catalyst you think for 2025? Does AMD outperform NVIDIA this year?
I don't know if it outperforms. It's definitely, I am bullish on AMD. I've always said every time I come into this show, I don't think AMD is the next NVIDIA, but that doesn't mean it can't do well. The AI accelerator market is going to continue to grow with supply constraint issues. AMD can definitely benefit as, hey, look, I can't buy NVIDIA chips. Maybe instead of waiting, I can buy a little bit of AMD chips right now. So just because of the supply constraint issues, it gives companies like AMD some opportunity to grow. Also, the consumer space, right? The consumer market is slow right now. I believe at least by the second half of this year, consumer will be a lot higher, which is a core revenue for AMD right now, not for NVIDIA anymore, right? For NVIDIA, the only true revenue that matters is data center. For AMD, because they're not that strong in data center GPUs, a lot of markets matter. So if a lot of markets are doing good, it can definitely be a nice bullish case for the stock. So I don't know if AMD will outperform NVIDIA, but I definitely believe AMD will outperform the market.
Okay, so Jose, I got to squeeze this out of you here, but December 31st, 2025, what price is AMD and what price is NVIDIA?
Man,
no one's going to hold you to it. It's
yeah.
to be wrong, right? But what do you think?
What are we at right now? If I was, I would say NVIDIA somewhere, and it all depends. All is in my mind thought process right now. It's all depending on AI innovating at the level we're innovating right now. Obviously, if there is some bottleneck in AI or some issues with AI, these prices would be weird. But I think NVIDIA at least 170 plus, and AMD I do believe could be in the 160s, 170s as well.
I think that's reasonable. I think that's pretty reasonable. I don't think that's crazy at all. ASML, thoughts on this one? Is this a buy right now?
So I think that in the semiconductor market, I want to say semiconductor equipment is probably my favorite play. This is the place I'm doing most of my bulk buying in semiconductor industry right now. Not necessarily in ASML. There's a lot of players in the semiconductor equipment market, but I think ASML would also ride that wave. ASML had a mid-year was up nice double digits, then ended the year down. I believe it was down 3% on the year. I think ASML and semiconductor equipment stocks have been beaten up. I think there was a lot of expectations that AI chips were going to need more equipment. That wasn't the catalyst for semiconductor equipment. The catalyst for semiconductor equipment is consumer growing, because those are the main players of chip demand. We're also transforming into more, the next generations of chips being made need better technology as we go to 2 nanometer. So all that is going to create a nice refresh buy cycle on semiconductor equipment. And I think ASML can definitely benefit from that.
So if we start shipping millions of robots and NVIDIA is making the chips for these robots, that's also still bullish ASML, right?
It depends on the type.
Like the question here is, if NVIDIA gets a ton of new demand for whatever new product, does that help all the like TSMs, all the semiconductor names?
Yes, it would. Especially if you're shipping at consumer volumes, right? Because that's the most important thing. At the end of the day, it all depends on the supply chain line. While AI chips, for example, are very expensive and have great margins, the actual supply, the actual numbers of AI chips versus consumer chips is very, very small. And that's why it doesn't really impact the supply chain line too much. Now, when we're talking about robotics, that's something that we're expecting to be a huge consumer market, where we even hear Elon where 3 robots per family. Now, if that becomes the case, then yes, if you have a high volume on robotics, any high super extreme consumer level high volumes is going to be bullish for TSM. It's going to be bullish for the semiconductor equipment space. Now, the AI chip market, we keep hearing supply constraints, but it's not that volume constraint. It's that advanced packaging that we've discussed. So I think that was the excitement for companies like ASML at the beginning of 2024. And we ended up realizing that, hey, look, it wasn't really the actual volume. It was something else down the line that was kind of creating the bottlenecks for shipping.
Right. Okay, let's do a couple more rapid fire, and then I will get you out of here, Jose. Thoughts on custom chips for Broadcom versus NVIDIA dedicated GPUs in the future and impacts on chips?
Everybody's always worried about Broadcom and Marvell eating NVIDIA's market share. But those companies can't enter the GPU market. NVIDIA can easily enter the ASIC market, and everybody would be a buyer. So I think NVIDIA right now, because of supply constraint issues, is only focusing on their own AI GPUs. But if supply chain issues go away, I think Marvell and Broadcom better watch out, because NVIDIA can easily enter the ASIC space and be a big player.
Thoughts on the ARM Qualcomm lawsuit?
ARM, it ended up being a little bit more on Qualcomm's side. I think ARM is still going to go, and it wasn't a true definite result. So I think ARM is going to go through it again, but it seems very bullish for Qualcomm right now.
SMCI, you're still staying away from it?
Oh, yes. I mean, SSMTI is a coin flip, right? It all depends on any good news or bad news about filings. And that's not something I'm willing to gamble on.
Micron, you still aren't that interested in it as well?
I actually am interested in Micron. I think Micron is, as long as they continue to innovate, and this is the cool thing about the AI market and the semiconductor market, as long as you innovate, you have a place. And right now, the memory market, because of the innovation needed, it's creating a form of moat. That moat right now is only being fought by Micron and SK Hynix. As long as they can keep within that moat, as long as AI chips continue to get innovated at rapid levels, I think Micron is pretty attractive. But it's all dependent on that scenario.
Okay. Last question for you, Jose. But before I ask this question, just want to give a shout out to this. Everyone, please make sure to subscribe to What the Chip Happened. This is the best newsletter that I subscribe to on the semiconductor market. Already 1,000. I get it every day. I see it in my email every day. I click on it. I'm like, all right, what the chip
just
happened?
Passed 1,400 subscribers. I'm pretty excited. Hoping to 15 by the end of this week. It's definitely, it provides, for me writing it, I get to learn a lot as well. So it's pretty exciting.
Yeah, no, it's really cool too. I mean, like 1,500 subscribers in like 3 weeks is amazing. So if you guys care about semiconductors, obviously Jose just spent the past 15 minutes spouting out all these random facts about the semiconductor ecosystem. I think he's the best guy to learn about this industry from. Okay, last question for you. Asteria Labs. Do you know anything about this one? We had someone mention on the show last week. Is this something we should be looking at?
Yeah, so Astera Labs deals with the communications of advanced AI chips, and communications is very important. This is a market that has kind of really jumped because of the AI chip. I think the company's trading at high valuation. Now here, the gamble is the market going to grow fast enough to meet these valuations? There is definitely a growth opportunity. I'm personally not buying it, but I can easily be wrong that, hey, look, this AI market.
What do they do?
So one of the great things about AI chips and NVIDIA specifically is that their GPUs can talk to each other at super rapid levels. Right. Astera creates one of the technologies that help with that communication bridge. And that's why they're getting a lot of the excitement. And I believe some of their big customers, I could be wrong, are like NVIDIA. And other players are, and NVIDIA is the only one that can really do that high-speed communication. There's other companies developing solutions. And once they develop that, Astera Labs can see the growth of revenue from companies like AMD, from companies like Broadcom and Marvell. So there is that growth opportunity. Now, for me, the question is the valuation worth it right now? And that's the one I can't really answer. But overall, not looking at valuation, the business is good. The growth opportunity is good. Now, the real question is, does that match valuation?
This thing trades at a 70 times price of sales. It is more expensive than Palantir. But it's up, right? Because as you're saying, there's not a lot of people that can do what they're doing, and they're getting demand from NVIDIA. So it makes sense. All right, there you go, Jose. Thank you for joining the show again. We'll have you on next week to recap whatever Jensen says on January 6th. And I'll see you next time. What the Chip Happened. That is the newsletter to subscribe to for Jose.
Thank you so much. Appreciate it. Thank you. And peace out.
See you, Jose. Happy New Year. Bye-bye. All right, folks. We are getting a little bit of a 1030 slam. I don't want to say it's a massive 1030 slam, but I mean, it's kind of there. Tesla down from 389 to 384. Still green, though. NVIDIA barely down, but NVIDIA's down like 50 cents. S&P's down like, again, 0.2%. SoFi still holding on nicely at 1443. SoFi is actually not getting slammed at all. SoFi's making new highs today. Yeah, it's not really that bad. Robinhood couldn't hold 40, unfortunately. We could not hold 40. 39.42. Nubank's up 2%. Square's up 5%. MSTR is up 3%. I mean, we're still pretty damn green. It doesn't look like a rug pull to me, but we do have a little bit of red across the market. It's just more red from where it was at the top versus actually going red on the day. And there we go. Intraday volatility strong yesterday and today. I love it. Yeah, where's the VIX? Where's the VIX? VIX is down 4%. All right. VIX was up, I think, like 7% yesterday, down 4% today. Crypto's moving up. Yep, crypto's moving up as well. And again, as Jose said, I mean, next week's going to be really important to see what Jensen says in regards to either getting into the CPU market and trying to take a little bit of AMD and Intel's lunch, or focusing on robotics, or maybe GPUs is what is the most important thing at CES. So I think those are the three things to care about: CPUs, robotics, and GPUs. Which one takes the headline will be the discussion after Jensen speaks for NVIDIA. And we'll see how that potentially creates more momentum for NVIDIA next week. Bitcoin, 97,165. So Bitcoin's not slowing down. Tesla just dropping below 384 right there, but holding on. Adobe is still down another 2.6%. Palantir doing nicely too. I mean, Palantir is down from 78, but it's at 77.60. That's holding up 3%. I mean, second day of 2025 doesn't look like a horrible string in terms of the string of events when it comes to how the market's reacting to the past couple of days of data, especially ISM data that we just got. Uber right here is up 1.84% as well. So Uber is up now about 6% from the lows. Enphase up about 20 bips here right now. Amit, are you still thinking about opening a Tesla position this year? Absolutely. I will be buying Tesla this year. Again, just trying to be a little patient and not spend all my money on the third day of January. So, I mean, it's one of those things where I'd rather be paying a little bit more than be super early and not sleep well at night because I'm spending all my money on the second day of the new year, right? So if I have to pay more, I kind of don't care. Like, I just want to make sure that I'm doing it where I have the most amount of data, where I've seen earnings from a variety of companies, where I can see what the Trump administration is looking like. And then we get in and we make some entries. But what I'm more excited about is selling some puts on Tesla. And, you know, if it still stays in this range, then 340, 350 puts look very attractive. And then if it gets there, then I'll be happy to buy those shares at 350, 340. But the question is just, I think we need more time. I think we need a little bit more time to see what the data looks like. And particularly we need more time because it's not a raging bull market like it was in 2024, because we only have 3 days of data for 2025. Now, maybe by the end of January, everyone concludes, nope, this is a raging bull market. This is 1997 and we're going way higher. And there's no slot stopping us like it was in 2024, or this is going to be choppy. And if it's choppy, that means there's going to be different opportunities. Like SoFi yesterday, the reason I deployed money, because SoFi was stupid, down 10%. Like, that made no sense. Now SoFi's up at 1450. You know, those are opportunities that I thought made sense. But for the rest of the market, I think we got to see. We got to see if things actually come down. Amit, how much taxes are you paying for 2024? It's not 6 figures, it's 5 figures. But it's the most amount of 5 figures I've paid in taxes ever in my life. I think I've never paid 5 figures. I think I've always paid 4 figures. Yeah, I think I've always paid 4 figures. So this one's like a lot more than before. So, yeah, got to save up for the taxes. Got to make enough money to pay back the taxes. Taxes suck, bro. They suck so bad. Like, I know they're necessary and all that stuff, but like, just sucks, dude. Just like having to plan to make sure that you have enough money to pay for your taxes is wild, bro. Especially off stock market gains. Off a job, it's whatever, right? Because it's like, you have to do a stock market. It's like, damn, bro. They're really taking 30% of this, huh? 77.73 on Palantir. We're up 3.3. That's green. Rocket Lab not up 10%, but it's still up 8%. Rocket Lab, I don't know what's making Rocket Lab this excited. But then again, Rocket Lab could go down to 24 tomorrow. I mean, Rocket Lab is almost as volatile as HIMS. It's just, I think Rocket Lab's more exciting than HIMS. But HIMS right here is up 5%. I don't know why it's up 5%, but it's up 5%. So both names, great candidates to wheel, but you got to be ready to take assignment on shares because they can definitely get in the money if you have aggressive puts on these. MSTR is up 4%. Yup, that's up. Bitcoin's doing well. SV says I got a big tax bill due too. It sucks. Yeah, I'm sure you guys are in the same position. There's decent amount of taxes you have to pay after a good year. Rango says, I drove to LA and back, FSD, including city streets and all kinds of complicated routes, no intervention. I'm so bullish on autonomy. Every time I drive Tesla, I don't want to sell a single share. Yeah, look, it makes sense. I'm finishing my update for the software for FSD 13 on my own Tesla. And then I'm going to upgrade to the extra free month that Elon's giving of FSD, and I'm going to play around with it a lot in January. Everyone that I listen to tells me FSD 13 is like, it's just incredible. Let's actually listen to a Tesla analyst from last night who is bullish, but is a little concerned about the deliveries. Again, the volatility in Tesla is on deliveries. It's not based on FSD, because everyone that I hear that's actually using it every day and that's taking it on long road trips, it is just one of the best products they've ever experienced in their life. And I felt it when I had it last month, and it drove me around my neighborhood. I was like, holy crap, this is just a different experience. It's insane for this robot to be driving. But it's happening. It's very real, and it's only getting better and better and better. Here is Rob Narayan, RBC, and here's what he had to say about Tesla yesterday after deliveries.
Worst performer in the S&P 500 today after reporting a drop in annual deliveries, its closest stat to sales. The stock has been under pressure in the last 2 weeks, now falling in 8 of the last 10 sessions. Shares are down some 20% since the slide started on December 18th. Joining us now is RBC Global Autos analyst Tom Narayan. He has an outperform rating and a $313 price target on the stock. Tom, Happy New Year. So Tesla didn't get up here price-wise on deliveries expectations. So any reason to think it goes lower on the miss?
It could definitely go lower. Man, this stock is up like 30-35% since the election. A lot of it is on things like animal spirits is the term I've heard. Not really necessarily running based on fundamentals. So the other thing folks are looking at is the Q4 margin. That could be lower than maybe expected because they had this benefit from FSD deferred revenue in Q3, which doesn't reoccur in Q4. So this thing could definitely go lower. But we still think, compared to the rest of autos and what's happening in 2025, there's reasons to own it. It's just that maybe you want to wait a little for this to kind of flush out.
Okay, so wait a little, but how long before we get more real signal of the sort that's going to put a floor under the stock? There's an expectation that the Trump administration regulations around self-driving are going to help Tesla more than its competitors, I suppose. Any clarity on when we'll know enough more that the market can feel good about that?
Yeah, I think that while I think it's definitely helps the sentiment, we have to just make sure we understand regulating self-driving is a state-by-state local type item. On a federal level, they can do things like take away steering wheels and pedals, which is definitely great, lowers the cost. But ultimately, to get robotaxis deployed, that's done on a state and local basis. But still, I do think a formal announcement there would help the stock. I think what folks are really waiting on is the new car, right? The new, whatever they call it, Model Q, I think is what was kind of in the press talked about a potential name. This is the affordable car that's below $30,000. Some people think it could look like the Cybercab, which a lot of people like. If this reignites volume growth, then whatever they just did now, today's number, which was a slight miss, that's all forgotten, right? Because now you have growth. Remember, these guys haven't had a new model in years. It's just been Model 3, Model Y, and now finally.
And that's a good point. I mean, if the Model Q or the next gen vehicle, $25,000 car actually does come out, like we have a legit car that you can buy for 30 grand from Tesla that's not a Model 3 or Model Y, I think that changes sentiment overnight. I think the street's still a little iffy on if it's actually going to happen. Tesla said it was going to happen, but the street, doesn't really believe Tesla a lot. So if that happens, that's another thing that makes deliveries not seem as important.
Finally, we get something really compelling. So, that could be a catalyst for shares, especially with this pullback. I just think like this margin number that we're going to get in Q4 earnings, which I think is Feb 29, I think folks may be waiting for that just to make sure they don't buy into kind of another pullback. But yeah, certainly the news of this new model, affordable car, could be another positive catalyst.
Okay, so certainly items to watch here into 2025. I'm curious, though, because you do have this outperform rating, but you got a $313 price target. Stock closed at $379 and change today. Does your price target need to come up? And I know you talked about fundamentals, but I'm going to ask maybe it's a really basic tongue-in-cheek question, but has Tesla ever traded on fundamentals?
No, and that's you nailed it exactly. The way the Tesla trades, it's on narrative, right? And very easily I can come up with a much higher price target. My price target is very conservative. I only value autonomy with certain market share assumptions, FSD with certain assumptions. I don't give very little credit for humanoid robot, which some folks, you could do the math on that. If it becomes a consumer appliance, it could be trillions of value. So I understand the question. I totally get it. I think my upside price target is above where the stock is trading today. So I think it trades more on sentiment, and also it's a relative rating is what we have. Autos right now, it's a very tough place to be. Lots of uncertainty. So in that context, I do think it's worthwhile owning Tesla, especially given a pullback scenario.
So quickly then, I realize this is a small piece of the Tesla portfolio, but the energy storage business, those numbers were actually pretty decent today, and they've been better than expected in the last couple of earnings reports as well. Should we be paying more attention to that?
Yeah, definitely. It's worth like over 100 billion of valuation for my valuation, which for most companies would be amazing. The thing is, Tesla's market cap is 1.2 or 1.3 trillion dollars. So while it does matter, and it will impact numbers, financials. Now you saw a huge monster number in Q4. In aggregate, this is still going to be important, but a small piece of the overall valuation, especially at such a high valuation point.
I mean, look, that's a fair point. Energy is growing rapidly, and it's a phenomenal part of the business that's not slowing down. It's the largest growing sector of the business, but it is a small part of the overall valuation. And I think one day it'll be a much bigger part. It's just right now Tesla mainly is getting the revenue from the car business. So what we heard from him right there is like, look, the stock trades on sentiment. The stock doesn't trade on deliveries. And if the deliveries are down, the sentiment goes down, therefore the stock goes down. But as he said, his bull case has autonomy as the overarching reason to be bullish for Tesla. And I think this year is going to, or at least the next 3 months, are going to be a push and pull between, does the street actually believe in autonomy? Or do they want the next gen vehicle to pump up deliveries because they're going to get more revenue growth, which really doesn't matter when it comes to autonomy. It matters because there's going to be more cars on the road that could be robotaxis, but it doesn't actually define the autonomy thesis. It just defines the numerical quantitative thesis around numbers going up and to the right, which is what the street wants to see. It's going to be a push and pull on like if that happens, if that doesn't happen, and how the street interprets that. Another big question is, are we actually getting that next generation vehicle? Because I agree with Just Paul in the chat as well, who said, if we don't get, so in the earnings, in the Q3 earnings, Tesla said, by H1 of 2025, we will release a next generation vehicle, which everyone has unilaterally come to the conclusion it will be at least $30,000 car, hopefully less, probably not gonna be less than 30,000, maybe it's gonna be like 35,000, but it's gonna be significantly cheaper than the Model Y, which for me was 45,000 after all the deductions, and a Model 3. If that doesn't happen in the first 6 months, or if that is delayed, I think that could create a phenomenal buying opportunity if like that's the reason the street dumps it. Because, Elon has said on earnings calls as well that he doesn't really think they need a next generation vehicle when they have the Cybercab. But in the earnings deck, if you read the actual vocabulary, they're saying we will release this by first half of 2025. No one fully understands what that's going to be yet. Some people are saying it's just going to be another version of the Cybercab with a wheel. Some people are saying it's going to be something totally different. So everyone's still waiting for what that is. And if we don't get clarity on that in the next 3 weeks, maybe that creates a great dip, just like the Reuters article created back in April when it went to 130, which, that was a phenomenal dip for Tesla. So I think those are the variables and those are the sort of externalities that we have to worry about when it comes to Tesla. But long term, you're buying it for a much bigger reason than just deliveries. Jose, thank you for the 10 gifted subs. Appreciate you, brother. Thank you for the 10 gifted subs. We are big fans of you every single week, every time you come on and give us all this juicy semiconductor information for 15 minutes. So thank you, Jose. Appreciate you for the 10 gifted subs. And we hope you come on every single week. Tesla right now, where is it at? Tesla is 386. So we are up 1.85% right here on Tesla. Not in the 390s like it almost was at an hour ago. It's 1041. We did have a little bit of a 1030 slam, but things are recovering really. Wow, look at Palantir. Holy crap. Palantir's at 4%. Even Grab went green. Whoever grabbed Grab, congrats. I didn't really have a chance to grab because I was streaming, but if you got Grab at like 465-ish or 462, congrats. Palantir, 4% on the day. That's green. All right, guys, I think I should buy my first share of the S&P 500. I'm probably buying it at a level where I could get it cheaper in a week, but whatever. I'm going to text Steve. He'll be maybe I'll call Steve. Let's see how proud he is of me when I buy it. All right, here we go. S&P 500. Swipe up. Wow, I just bought my first share. Look at those nails, though. Anyway, I just bought. Dude, like now when I show you guys my phone, I have an opportunity to show my nails. Look at the S&P. 588.97. How much you want to bet this shit tanks over the next week now? How much you want to bet this thing goes down now that I'm a proud owner of the S&P 500? Are we down already? Wait, is it down already? What did I get it? 589.96. Oh, no, it's up. It's up. We're up like 10 cents. We're up 10 cents. There you go. All right, let's call Steve. Let's see if he picks up. I'll tell him I'm a proud owner of the S&P. All right, we're gonna say I bought 10 shares of Palantir instead. Let's see if he picks up.
Inglés.
What'd you say?
No habla inglés.
Oh, well, we need you to speak English because people want to hear from you. Also, I have to tell you something, Steve.
What do you have to tell me?
By the way, you're live. Good morning. You're on the show. Good morning.
I mean, I figured out you were doing.
Just want to let you know in case you say anything you're not supposed to say. I gotta let you know. So I know you told me to buy 10 shares, or what you bought. You told me to buy 1 share of the S&P 500. I decided to go against your advice, and I bought 5 shares of Palantir this morning instead.
Okay.
So 5 shares times 80 is $400, a little bit cheaper than the S&P 500. I just wanted to let you know that I think your like narrative about like being long America is pretty boomerish, to be honest. And
you did not just say that tonight.
I
did not just say being long America is boomerish.
I'd rather trust Alex Karp over America. And
how about this? I'm trying to protect you from yourself. How about that?
What? So you're trying to protect me from Palantir? Are you afraid of Palantir?
I'm trying to protect you from yourself.
What does that mean?
It means you and I went through the numbers, and if you do what I said over an extended period of time, you know the amount of money you will have, and that is separate from your other investments. I am trying to protect you from yourself. So
you're saying I shouldn't have bought the S&P?
I'm not saying you shouldn't have. You said you didn't buy the S&P.
No. I mean, okay. I actually bought the S&P. Damn it, I just messed. I bought the S&P. I didn't buy Palantir. I bought the S&P.
Okay, good. I'm very proud of you.
I bought 1 share of the S&P 500. I'm going to send you the screenshot. I bought it at.
You don't need to send me the screenshot.
No, I want to send you. We got to remember this moment for history.
I like it. And here's the best part. You bought SPY, I believe.
I did buy SPY. That is correct.
So the advantage of buying SPY for you over VOO or IDD or one of the mutual funds is that they have daily covered calls. So you have liquidity any day you want to write, a single day or a 2-day or a week or a 2-week. You can pick your poison.
Are you proud of me though? I'm like saving.
I'm very proud of you because you know what? You're diversifying. You're buying America, the greatest economy in the world, and you're young enough where if you put in what I told you a month to siphon off the top, by the time you retire, if all your other investments go to zero for some reason, you will be just okay.
Dude, what's that
You will
website?
not
I want to share it live. What's that website you showed me?
You will not have a care in the world. Investment calculator, just type it into Google. It'll be like the first or second thing that comes up.
Okay, so this thing is pretty cool. I know it's super basic, but let's look at it right now. So if we start with, we're gonna do 30
Start
years.
with zero. Start with $0.
Starting amount 0, 30 years.
You're what, 28?
Yeah.
All right. So do it for let's see. How many years should I do it for? You can't take Social Security, you can take it 62 theoretically.
We'll do 35 years. 35.
You didn't want to. Do 35 years.
Okay. And then annual contribution should be what? 12,000? 1,000 a month?
Do 37 years because that gets you to 65, and I believe that's Medicaid or Medicare, whichever one it is.
Okay.
So do a 10% annual return.
I'm gonna do 12,000, 1,000 a month. That's what I'm doing.
And just do 1,000 a month.
So by the end of 37 years, wait, why is it saying I'm gonna have $50 million? I did the math wrong.
Because you probably have a fucking compounding monthly, or you're putting in. Yeah, you did something wrong.
Oh no, now I got it right now, guys. 4 million. Yeah, I had 12. It should be 1,000 every month. So you would have $4 million in the next 37 years if you put in
And tell
1,000.
everybody on the right-hand side what it says for principal and interest. How much did you put in, and how much interest did you accumulate?
So I deposited 12,000 a year for 37 years. The interest was 375 grand by the 37th year, which leads to a compound of 4.1 million in total.
No, but there should be overall figures on the right about the amount you completely invested and the amount that was straight interest.
Oh, total contributions was 440,000.
And then
total interest was 3.6 million.
So basically, that's a pretty good ROI.
Yeah, but now do the same thing for Bitcoin, baby.
For not thinking, for doing something automatic, for something that you have tremendous data on, going back, and the only way that this fails is if America fails. If America fails, we have a lot of problems, and this stuff don't matter.
Okay, so Bitcoin goes up 60% per
Who cares
year.
about Bitcoin?
So I'm gonna put 60% as my return rate.
Who cares about Bitcoin?
I would have 893 billion. If I put 1,000 into Bitcoin.
If you didn't buy Bitcoin 5 years ago, most likely you missed the boat on Bitcoin. It doesn't matter.
I don't know if you missed the boat. I would say you're just a little.
I mean, people are talking about Bitcoin having a great year. How much did Bitcoin go up last year?
It went up 120%. What are you talking about?
Did it go up 120%?
Yeah.
Up like 20%.
No, bro. What world are you? Bitcoin went from freaking.
I don't care about Bitcoin.
Well, obviously you don't care about Bitcoin. I mean, like, we get that.
Nvidia went up more than Bitcoin. Palantir went up more than Bitcoin. Whatever. Bitcoin, cool story. Fake.
Okay, let's talk about stocks. So let's talk about Nvidia.
Let's talk about the future and Amit becoming an adult. And listen, investing in S&P is possibly the greatest investment you can make, because you know what? If one stock doesn't do well, the other ones will pick it up. You get the best of all worlds, and you catch every ride up. You may not catch it the same way if you invested in the beginning, but guess what? You're always invested in NVIDIA. You're always invested in Apple. You're always invested in Amazon. You didn't have to pick bottoms or anything. So you may not get the full exposure, but you're getting a percentage of it. And over time, this has been a great investment. It is the 500 largest companies in America. And
you know, to be fair, S&P 500 has not been a great investment. It's compounded 7% over the past 120 years. Like, that's not.
What are you talking about? The average return?
No. We looked at it. We factor in dividends and you look at inflation. No, I'm looking at 1900.
57. Why would you go back to 1900?
That's the chart I looked at the other day. It said 6.7% annual real returns with inflation and everything else.
Got to go by 57 because of all the stuff that happened pre. And plus, it's a much different economy now than it was back then. That's why you do 57. Even 57 may not be the right year to use. And that's what everybody uses, from Investopedia to all the other things, because it's either 10.2 or 10.4% annualized return. But it's not the same economy. Back then, it was an industrial-based economy. There was no services.
Wait a second.
So
I know why you want me to buy the S&P 500 now.
why?
Because you were buying it in 2005, and you want someone to pump your bags.
I was not buying that. If I
You
was
were buying the
2005,
S&P when it was $100, and now you want me, the next generation, to give you exit liquidity so you can cash out at 600. That's what's happening.
If I was buying the S&P in 2005, I'd be very happy. I was not.
I figured it out. You just want the new generation to give you some money so you can get out. That's it. I get it.
You do realize I have like 2 decades before I can retire, right? If not longer.
I'm just saying. I feel like you.
So I'm forced buying the S&P for at least another 20 to 25 years.
Well, look. Yeah, but your average will never be 580 on the S&P because you've been buying it since it was $100. So.
I mean, I don't know when I started buying it, but it wasn't 2005. It wasn't. It was after the financial crisis.
Okay, so hold on. That was at like $80, bro. The S&P crashed after the financial crisis.
I mean, I'm still buying it every 2 weeks, and I don't stop buying it every 2 weeks.
You started buying it when it was $50 in 2009.
I will tell you.
Holy
that
crap!
During COVID,
I just became exit liquidity for you. I just realized
you did not become exit liquidity.
Oh my goodness!
Because I am buying for the next 2.5 decades. So you did not become exit liquidity. That's number one. Number two, I will tell you that when Black Swan events happen, like COVID, and I look back and look at the shares I bought every 2 weeks during COVID, those shares are doing really freaking well right now.
I mean, look, yeah, you're right. When you buy America on the dip, America tends to rebound. So
you just buy it every 2 weeks. You buy it every paycheck. You buy it every month, whatever your income scheme is. You buy what you can afford to put away, and it is your straight retirement fund outside of other investments.
Well, if I bought Palantir in the morning, I would already be up 5%. The S&P is up 1%.
Yeah, but once again, you don't know if Palantir is going to get chopped in half or not in the future. You don't know what's going to happen. At least with the S&P, S&P is always going to be there unless America fails.
I mean, the way our debt is set up, I'm just saying.
You can't. I mean, I guess you could just make individual investments, but when it comes to your retirement, listen, my philosophy is my retirement needs to be safe. I can take as many chances as I want privately, and if I screw them all up, at least I have my retirement fund to fall back on. And I'm not taking chances with it.
Okay, but what if America does fail?
The world's got a lot of problems then, and it doesn't matter. Because listen, if America fails, most likely you and I aren't getting out of America. Most likely we're going to die. So
wait. Why are we dying?
If America fails, you don't think that it's going to be for some crazy reason where we're all gone?
Well, I think they might go into war or something, right? So maybe then we get called up to go to war. That's how we could die, maybe.
If America fails, and you got to think about what the definition of actually failing is, because we've had situations where we've gone into wars and America has not failed. America failing, the greatest economy in the world failing, means that there is global disaster.
That's true. That's true.
So you don't have to worry about that happening.
We would be covering it. We would be covering the failure live on the market open, though. So we'd make sure to.
If failure happens, we will all be done for. So it does not matter what.
Yeah, look, I'm just trolling with you. Obviously, I know I have to.
No, really, you're just trolling.
No,
of course you are.
I wanted. You believed me so easily though when I told you about Palantir over the S&P. I could feel the disappointment in your voice.
I was questioning you because I knew that you didn't.
Yeah.
And that's where I caught you and tricked you up.
All right, can we talk about some stocks? Tesla.
Did you watch the Jack Brand video that I sent you this morning?
Yeah, no, I saw that last night when the market closed. I played that clip in front of everybody. He's totally right. I agree with him. 100%.
I mean, is that not what I've been saying?
Yeah, Josh Brown gets his talking points from Stephen Fiorillo.
I'm not saying he gets his talking points from me. I am just saying that I've been telling you that for quite some time about flows and forced buy.
Steve, we need to start a podcast that competes with the Compound and Friends because your takes are better than Josh Brown's, and we need to get them distribution, and we need to make this happen.
I don't want to do that because I like Josh Brown and Michael Barnick. I think they're phenomenal.
I don't care if you like them, bro. Like, we can still do a podcast. It doesn't matter.
Listen, I happen to like those guys at the Compound. They're my favorite. Like, out of all those things, the two podcasts that I really listen to, or I try to listen to every week, are all in and the compounding friends.
Yeah, but that
and
doesn't
I
mean
say
we
three.
can't start a
What are your thoughts?
podcast. We can still start one, like just because you like them.
I guess.
If I get my studio, hopefully later this year, then we have to do it because it would be awesome. But okay, so no, I agree with everything Josh Brown said, and basically said bet on America, which is what we need to do.
Yeah, and these people that are trying to be practical, like, cool, drive yourself crazy, try to be tactical, try to figure all this stuff out. I'm just gonna keep buying because I have no reason to sell right now.
Okay, Tesla 387.
Don't care.
Is the dip based on deliveries a reasonable dip?
It could go under 300, it'll still be a reasonable dip. Come on.
Okay, this is where I have to push back. Why are you so bearish?
You can push. I'm not bearish. I'm a freaking shareholder. I'm not bearish. I am a shareholder of Tesla. I just think the valuation's crazy because everybody says, and everybody used to say, you pay up for growth, you pay up for growth, you pay up for growth. Okay, cool story. You're paying up so much for growth when you can buy NVIDIA and get more growth than Tesla. So what are we really arguing? The numbers don't make sense.
So you would rather buy NVIDIA at 143 than Tesla at 387?
Yes.
Okay, so break that down. I don't think that's a horrible decision, but why? Why would you do that?
Okay, right, because there are way more knowns than unknowns today. Look, I'm in Tesla because I think it will be the largest company in the world if a lot of things go right in 10 to 15 years from now. Keywords, a lot of things go right. I have no idea if they're going to go right or not. NVIDIA, I think, is going to go up with a high level of certainty for my investment reasons because of everything I'm seeing from the ecosystem of companies that buy products from them, and the demand is off the charts. And when you listen to what Jensen is saying, they're also getting into services and diversifying. And not only are companies going to be buying a lot of chips from them, they're going to be getting AI services from them as well, and server services from them as well. And that can become huge. And when you look at what 40 to 50 analysts, I don't know exactly what the numbers are, I think it's like 47 or 48 analysts are predicting for the future EPS for NVIDIA, you have 89% EPS growth over the next 2 years. And when I backdoor into the numbers about what their margins are, and I don't have it up, but I'm pretty sure I remember to a level of certainty what it was around. When I look at their forward forecast for Q4, what their margins are, and the trend that they're on track to generate roughly 60 to 70 million of net income this year.
I mean, billion.
Next year, billion. And then next year, they are on track to potentially generate more profit than Apple. And when I do the backdoor math, it lines up with what the analysts are projecting on an EPS level. And that doesn't even include if Jensen starts plowing even more capital into buybacks. And quite honestly, NVIDIA is at a price that you can get more volume on because it's less than half from a number value of what Tesla is. And while that doesn't really mean anything for valuation, it does provide a level of liquidity because more people can afford to buy NVIDIA than Tesla. And that may be a very remedial way of looking at it, but that's why companies split their shares, to provide liquidity in the markets, because people are more likely to buy shares that are around $100 than $1,000. And that's why you don't have people trading shares of Berkshire A, because nobody is buying and selling $450,000 shares.
Okay, so essentially, I kind of agree with you on the perspective that there's a lot of unknowns for Tesla, definitely in the short term, especially after this deliveries miss. And you feel NVIDIA right here is actually going to live up to their growth. You were buying NVIDIA in that 120s dip, so I'm assuming you're happy that this has worked out.
Yeah, I mean, I got to look at my call options today. I think I still cover calls for next week, not this week. I think it just blew through my strike price today. I got to look at it like 1 o'clock and see. But yeah, I mean, listen, I've been able to write a bunch of covered calls that didn't get away from me. So I've been able to basically shave, I think, 10 or 15% off my actual investment. So if I do not know my average price per share, but let's just say my average price per share was 120 or so, I brought it down to like 105.
Yeah, it's the beauty of selling options.
I mean, and look, there's big option premiums on it. And I just think that there's more upside potential in the next year for NVIDIA than Tesla. Tesla has gone so far out of touch with what makes sense. And look, I believe in the robotics thing more than most people. Okay. I've been saying it for a long time. Some of our friends thought I was crazy when I said I would buy one in a heartbeat. And the actual comment was, you're going to have a Terminator living in your house. Yes, I am. I fully believe in the whole.
Have you seen the Terminator, by the way?
Don't start me, because I know you haven't seen it. So
I just want to make sure.
Just stop.
Okay.
Because Palantir is basically Skynet. So I don't know why you haven't seen it. But anyway,
Okay.
Tesla has so many things that need to go right that I don't think in the next couple of years it's going to go much higher. I could be 100% wrong.
Wait, you think Tesla's not going to go much higher in the next couple of years? That's what you're saying.
A couple is two. Several is more than two. Okay. Couple is two. I think Tesla's going to be difficult for the next 2 years.
Wait, so you think by 2027 Tesla is still at 380? That's your argument.
I don't know that it goes up much, because their forward catalysts are FSD and Optimus. It's certainly not selling freaking cars.
Well, if that next gen vehicle comes out, which is supposed to come out this year, I mean, that's a big deal, Steve. That's not a joke. That's,
once again, I don't think people are crazy about EVs the way the media is making it out to be.
No. If they make an EV for 30 grand, people are not buying this Honda Civic.
I don't care about an EV for 30 grand.
You might not, but a 27-year-old might.
A 27-year-old that has the ability to charge it might.
Steve, don't give me the charging bear case, Steve. Come on.
Of course it is. It's a
don't give me the charging bear case.
Of course it's a bear case.
Oh, my gosh.
Until you have charging stations that are as broadly dispersed as gas stations, and charging takes 2 minutes, it's a bear case, because you have too many people that do not own a home or rent a home that has access to charging. You look at major metropolitan cities like Los Angeles, Chicago, New York, Miami, there's nowhere to charge unless the building or parking garage that you're in has charging stations. My building has 68 or 70 spots in our underground garage for our residents. Okay. We don't have a single charging station.
Look, I get it. I'm not saying you're wrong. I'm just saying I don't know if that's like the reason people won't buy a $30,000 EV over a Civic.
I am just saying that when gas is still the dominant force, and I do not believe that the craze for EVs is the same that it once was. And I'm not buying Tesla because of the car business. I'm buying it because of the robots. And I think that takes several years to come to fruition and more years to play out. And once it does at mass scale, it's going to be incredible, because I think they'll become the largest company in the world. So I'm buying Tesla for a decade out, not this year, not next year. And whether Tesla goes up or down, I could care less.
So that's a fair point. But one thing I will push back on is if you're buying it for the robots and we get robot news this year, I mean, that takes it higher than 400 to me if the robot news is actually good.
Listen, if we get actual robot news, that's definitely going to be bullish for the stock. But it really comes down to news is news. When do they start seeing revenue and profit from it? And are they going to implement what I articulated in my articles, when I want to see them implement a learning plan? Because this is where it gets really big. You get a robot for $20,000 to $25,000. A lot of people are buying them. Forget about people, companies are buying them. But what's even more important is charging $39.99 or $29.99 a month. You don't want to go crazy at $100 a month. When you do something like $29.99 a month, where your robot is hooked up to the neural network of Tesla's servers, and it's learning every second of every day from every task that every other robot is doing, so it just infinitely gets better. Everybody is paying $30 a month for that. So not only are they going to get the revenue and the profit from the hardware, they're going to have a high multiple business on the service side, because they already own and depreciated the servers.
Okay, let's talk about Palantir. We're up 5% today.
Whoopee.
What are your expectations in 2025 for this one?
I mean, I think it's coming down after Q1.
Because of just like earnings won't be as good? That's your...
If this goes to 100, I will be, I don't know. I think the valuation's crazy. This is my favorite company. I love the mission, love CARP, support everything they do. Love the company. Valuation doesn't make sense. And stocks don't go up forever. Eventually they come down. Even Amazon came down 50% and Alphabet came down 50%. Meta was printing tens of billions in profits and they got chopped down by 70, 80%. So this is most likely will not go up in a straight line forever. And I just think that there's so much pulled forward. I just don't think Q4 results will be able to keep the ship going this way.
Well, when you ontologically think about Palantir's valuation, there's a different understanding of it than I think.
You're stretching, sir. You're stretching so hard.
Look, I get your point, but look, so far market's been able to hold up the valuation after earnings. If we're still able to hold up, then I think we're in a new normal.
If after earnings, I will agree with you. After earnings, this does not sell off and this keeps going up, and there's even more volume because more people buying, we may be in a new normal where we don't come below 60 for some reason on a retracement. But this is probably the most important earnings call. And while people have said that so many times, this really is because of where the valuation is. And if they don't pull out all the stocks, then I think you're going to get a hard retracement. But if they do, it sets up a new normal. But this ain't staying flat after earnings. It's going one way or the other.
Okay, Sofi, what did you think about the downgrade yesterday?
Who cares about whatever freaking person wrote that thing or whatever freaking I could care less about them. Whatever.
I sold some puts as soon as they said that, and they're doing well. So I agree. That was a really stupid.
Yeah, I mean, look, not everybody's going to like every stock, and there's bear cases about every stock. There's bear cases about Apple, a company that generates $100 billion in profit, almost $2 billion a week in profit. And there's bear cases about Apple. So. Look, I do my own research. I care about my research and what I'm seeing and the vision that I'm putting together based on facts that I'm reading. And, I haven't seen a fair report that's been able to convince me that I'm correct.
Okay, so this is my last question for you, Steve, and it's kind of like a macro question, but we've had 2 days of 2025. Yesterday was kind of today's a lot greener. And this is a really important question. What are the vibes going into 2025 for you?
For me or in general?
For you and me, I mean, what is your vibe on the market? How are you interpreting? Like, is this a choppy year? Is this a large cap goes down, small cap goes up year? Is this a buy the dip every time we get a dip year? Like, what do you think of this year?
I think right now it's a feeling. This is the beginning of a fight, okay? The beginning of any MMA fight or boxing match, it is traditionally feeling out phase for the first 30 seconds or minute. People are lining up their jabs. People are getting their distance. I think people are feeling out what's going to happen when the new administration takes over because the media has put such a spotlight on tariffs and creating scenarios. Nobody knows what's going to happen, okay? Nobody knows. I could be right. I could be wrong. News outlets could be right. They could be wrong. Nobody knows. I think it's a feeling out process for the month of January. You're going to look at and see what he says and what he does, what the team does. But I don't think anybody can say that this guy hasn't put the best and brightest around him.
Yes. This
guy has obviously put the best and brightest around him. And if you think that he hasn't, then I don't think you're looking at this objectively. It's hard to say that Musk, who has done what no other person's been able to do, and is running 5 different companies, is one of the smartest people of our lifetime. People like David Sachs, I mean, it's just there's so many smart people around him right now. I think that we're going to get good trade agreements. I'm not worried about tariffs the way other people are. I think it's going to be a negotiation tool. But look, if he comes out and does something crazy with tariffs, you're going to probably get a big retracement in the market. I just don't think that that's going to happen. He uses the market as the yardstick for measuring. He is not going to come in and implode the market. I just don't believe it because he depends too much on it to count how good he's doing and how good his policies are. So I think it's just a feeling out phase at this point.
I really agree with that. The feeling out phase essentially is this idea that for the next at least 2 months, because Trump gets into office at the end of January, markets are going to be fighting back and forth with the narrative, the headlines, potentially Trump's tweets. Speaker Johnson, he doesn't even have the votes to get confirmed today. We got to see what happens there. So like there's all these different unknowns and variables, which means, are you staying on the sidelines with cash, or how are you thinking of deploying?
Well, yeah, I mean, look, right now I am waiting to get all my stuff from the brokerage firms so I can do my taxes and figure out what I need to pay this year. So I'm not putting, except for my retirement accounts and my account that I put a certain amount in every month, I'm not deploying additional capital into personal accounts that I use for individual investment type stuff until I get through tax season, or until I have a better idea of what I'm going to owe this tax season.
Yeah, I think that's fair. And that also gives you time to kind of see how the heck the market interprets this new administration.
But I mean, look, I'm still buying S&P every 2 weeks.
Oh, we know that.
Still
of course we know
I'm
that.
still making other investments every month. And I don't really count that dividend harvesting series that I write. I'm still doing that every week as my series. And I gotta tell you, this is going to sound crazy, but that series is the most fun I have in the market. And it's crazy because it's a small amount of money. It's just so much fun for me. I mean, you know the one I'm talking about, right?
Yeah, the one where you track the dividend stocks. Yeah.
Yeah, I started with nothing, putting $100 a week in and documenting every investment and every metric on it. And after 200 weeks, I put 20 grand into it. The value is like 24,600 or something like that, but it's generating a 7.8% yield with 99 positions, and the forward dividend income is $1,919.68. I mean, I have more fun doing that than the other investments I do.
I just put your Seeking Alpha in the chat so you guys can check out Steve right here in the chat. All right, Steve, last question. I'm not asking this. Someone in the chat's asking this, but I have to ask you because they paid $10.
Alternative Asset Weekly is a real thing.
Alternative Asset Weekly might be a real thing, but they
by the way,
hold on. They paid $10 for this question, so I have to ask it.
Hold on. Alex streamed for 7 hours on Wednesday night ripping. I was texting with him yesterday. He's like, Steve, he's like, I cut stuff off at 11 o'clock on the website. It's like I had a 2.5 hour backlog on stuff I had to still rip. It lasted 7 hours. I mean, at one point I saw the had 498 people watching live. And if you're watching live, you're probably buying stuff off the site. I am telling you, the amount of product that's being opened in the Pokemon space is crazy, and sealed product is going to keep going up. I just think it's going to become so scarce.
First of all, Alex is killing it. He understands content really well. He's coming like I know what it feels like to stream for a long time, right? So you got to just go through it. You got to do it, and if you have fun doing it, it makes it even better. But the fact that there's that passion of a community of people watching Pokemon ripping ships is like, yeah, it's a big industry. I 100% agree that market is expanding. I just don't know which ones to buy, but
you buy every set. You buy the booster box of every set, and that's it. Right. And you keep it sealed. You throw it in a closet or a storage. You can even forget about it.
All right, so here's the question by Rob Bohr. Rob, thanks for the super chat. He says, Steve, I know it's a touchy subject, but what is your honest Palantir price target in 2025?
I mean, I don't have one. I wouldn't be surprised if it goes to 90. I wouldn't be surprised if it goes to 130. I wouldn't be surprised if it goes to 45 or 50. Nothing would surprise me. I don't have one. I think it's overvalued here. I think it's very overvalued.
But your gut says closer to 45 than 90.
No, I mean, listen, you don't fight the Fed, you don't fight the trend. And right now, you don't fight the Palantir trend because they ain't coming. Nothing has been able to take this thing down. The interest in it's too high. So I wouldn't fight this trend. I mean, I based on all the information we have, if they continue to impress on earnings, this thing can get over $100 this year. But I'm not buying it here. I don't think you're buying it here. And this is just something where, I don't know. Too hard to make a call on this.
Well, it's fair. It's fair. I get it. I understand your frustrations with it, but I do think, dude.
I'm not frustrated. I just think it's ridiculous when you look at other software companies like Salesforce or Oracle or SAP or any of these other software companies. This valuation's crazy. That's all I'm saying.
My prediction, I haven't made a full-on video about this, but I'll say it here live. I think they get to 40% growth by Q4 2025.
They may.
And if they do, I don't care what the valuation conversation is, the street is buying this stock. It's just that simple.
I'm not going to disagree with you.
So I think if you believe in the growth story, then you got to believe that this thing has a shot to go higher if the macro holds up.
Listen, that's why I say I wouldn't be surprised if it goes to 125 or 45. I wouldn't be surprised either way.
Yeah, and I don't have a price target. I agree with you on the price target. I don't know what the price looks like, but my growth rate, I really do think 40% by the end of the year is possible.
And they could. I mean, look, net dollar retention is over 100. That's incredible that they've been able to keep it over 100%.
It's like 120%. Yeah, it's good.
I know. I'm just making a generalization statement. And the reason I make the generalization statement is it's very hard to get companies to spend more than what they originally contracted for. That means Palantir's doing something really right, and that people love the product. And I don't think people look at things in that regard.
Yeah. No, I agree. And if we do get any dip because of the SARS or they miss on EPS for some whatever reason, I think that'll be a good dip to buy if that's the dip that takes it down, not the fundamentals. So
I'll tell you this, it gets under 50, I'll become a buyer again.
50, I said this a couple weeks ago, 50 is my really get excited. 65 is when I'll start nibbling, but 50 is when I'm like, okay, I'm in,
no, I'm not nibbling. I'm buying a couple of shares.
The reason
it gets under 50, I'll become a buyer again.
But the reason I would nibble at 65 is because I'm like, I don't want to be the guy waiting for 50. You know what I mean?
Yeah, but you also don't need to own more of it.
I get it, but I do want to own more. I almost bought 5 shares today instead of the S&P.
Are two different things.
Yeah, I get it. But
you need to own more of the S&P.
Yes. Well, I took my first step today. So
I know, and I'm very proud of you.
What about the Qs? Should I have bought the Qs instead?
I mean, I don't own the Qs. I like the Qs. I don't think there's anything wrong with owning the Qs. I just think it's more volatile. And in a down year or a bad year, if we get a freaking elongated bear market, I'd rather be in the S&P than the Qs. I look at that as the retirement money. I look at that as the nest egg money, not trying to freaking have it double every 3 years.
Hold on, real quick before you finish. Put in the chat, guys, if you have a 10% or higher position in the S&P 500 or something similar to that. Put in the chat. I want to see how many people have at least 10% of their net worth in a very safe ETF. Go ahead, Steve.
Yeah, I mean, it's just one of those things where if you start out in your mid-30s, okay? Because some people take a different path. Some people save and buy a home and do other things and have student debt they got to pay off. Even if you start off in your 30s and you're 35, you still have 3 decades. You still have 30 years to invest in your retirement accounts. I mean, 30 years of putting $1,000 a month away, which is 50% of what you can contribute to a 401k, you'll still be a multimillionaire in your retirement.
Yeah, but what if I want to be a millionaire before I'm 65?
But listen, the reality is, for most people,
are you about to take my dreams away? Or are you just about to take me back to reality?
No, I'm being a realist. Most people are not going to save $1 million liquid outside their retirement accounts because it is very hard to do, 1. And 2, the bottom line is life gets in the way. But your retirement account, you can't touch. You're not dipping into it. And it's just going to grow over time. That's why I continuously say, the very first thing for me, before you make individual investments, save for your retirement.
Yeah, look,
because you can screw up individual investments, but you save in an S&P index fund over 30 years, chances are, based off of any period, you could have started at any height over the past 50 years, 60 years or 70 years, you would be net positive.
So your argument is for the average person to get to a couple million in net worth by 65, the most easy thing to do is buy $1,000 of the S&P every month for 30 years.
You can put more in, set it and forget it. Because listen.
But what if you buy Robinhood options instead?
Yeah, you could make a lot more money, but it's a lot riskier.
Well, yeah, that's true. That's true.
Look, this is not a get rich quick methodology. I'll never forget when COVID happened, okay? Our old CEO says to me, like, I don't know, 2 months later, man, this really sucks. I put a lot of money in the S&P for my daughter for college. I said, don't worry about it, buddy. You're fine. You know, like.
Yeah, no, we rebounded really nicely.
It rebounded, and it kept going up, up, up. And he bought at a high, at a very big high, at a time when it seemed like the world was going to shit and the markets were staying horrible. And everything worked out. And that was what I would classify as a black swan event. Do we get another one of those? Maybe. But if we don't, what are we going to see? A 10 or 15 or 20% correction? And then it rebounds? Great. The best part about buying S&P is you buy high, you buy low, you buy in the middle. You're going to average out and have a great price. And yeah. I don't care who you are. You can't time tops and bottoms. You just can't. You can't pick a bottom. You can't pick a top. They just naturally happen. Sometimes you make great investments and sometimes you don't.
Yeah, and the other thing of the S&P 500 is like 2022 it was down 20%. 2008 it was down 50%. But most years it does, if it goes down, it's not going down more than 15-20%, right? Now it's not going up more than 10% most years, but still.
Go to macro trends. Go to the market and pull up the year by year bar chart of the S&P. Look at it. I mean, the bottom line is over time the S&P just goes up. Yeah. It doesn't matter how bad it is. You could have invested in 99 right before the dot-com bubble and had a huge downturn, and then the rest of those years in 2003 to 2007 or whatever it wasn't great, but eventually everything worked out. And if you were doing this back then, God bless you, you were buying at really low levels.
But what is your, so for the people in the chat here that also invest in individual stocks, that's why they're, you know, they care about the markets. What is your philosophy on that? What is the percentage allocation that you have fun with versus you?
Everybody's got a different risk tolerance. That's a loaded question.
So what do you do? How much do you go in ETFs? How much do you play with?
I've never done the calculations. I don't know.
But you would argue it's more on the side of safe versus individual stocks for you.
I mean, what are we talking about? Are we talking about personal accounts or are we adding retirement accounts?
I mean, just in general, like, do you have more money in the S&P or more money in individual stocks? That's my question.
I don't know. It depends.
Obviously, it could fluctuate, right? If NVIDIA goes to 200, you're probably gonna have more in individual stocks.
Yeah, I mean, I have more in individual stocks, I would think. I'd have to look at the accounts and stuff, but I have a good amount of ETFs. Like, I have ETFs outside of the retirement accounts.
Yeah, I think you have like 50 ETFs. I think you told me once. You have a lot of them.
Not 50, but at least, like, look, I don't count that dividend harvesting portfolio because it's a much different thing where the goal is not capital appreciation. It's to mitigate downside risk with generating recurring income, and I'm doing it for a content series. Much different goals with that, but taking that aside, I mean, the account where the ETFs are, there's probably 20 or 25 ETFs. And it's look, I have overlap. And I have overlap for a reason. I actually like overlap because while I have my retirement strictly in an S&P index fund, okay? Outside of that, I have an S&P index fund, but I also have a world fund. I also have a total market fund. I also have international fund. I have emerging markets. I have a lot of different stuff for specific reasons. I have dividend ETFs.
Okay, Steve, let me ask you this question. So John here in the chat says, guys, let's be real. I'm 30 years old right now. 4 million at 65 years old doesn't excite me. Am I wrong? What would you say to that?
Yeah, you're 100% wrong.
Why is he wrong?
Because you got to put things in context. Most people are never getting to that number. what you see on social media, all this other stuff, is not the norm. Go look at what the normal stats are for what people retire with. If somebody's saying that 4 million isn't exciting to them, do it right now. Google how much does the average American have saved for retirement.
I mean, it's like 10,000 or something. It's not a lot of money. They're like, yeah.
Google how much is the average that Americans retire with?
Average American retire with?
I think I know what it is, but I don't want to give a bad number.
Okay, give me your number. I have my number.
Yeah, I think it was something like 200 grand or something like that.
Yeah, it's almost exactly 200 grand. Yeah.
Yeah. So for somebody to say that 4 million doesn't excite them when the average American that has retired with 200 grand, that's a full sense of reality.
Yeah, and look, here's the thing. I think if 4 million doesn't excite you, it means you're obviously more ambitious. And if you're more ambitious, then, and I think you would agree with this, Steve, by the way.
Or you're doing really well.
Yeah, that's my thing. So if you're more ambitious and 4 million doesn't excite you, that means the individual pursuits outside of the stock market that you're dealing with your job, career, startup, business, etc., that should yield enough actual income outside of investment income to propel you to something much more than your goals, which in this case are 4 million.
4 million may not be a lot to some people. 4 million is everything to many people.
Yeah.
And when I'm talking about this, I am talking about broad context, because that's what the question is. It's broad context and putting things into reality. Are you able to afford a home in the Hamptons and a private jet and all these other things for $4 million? No, but that's also not normal.
Yeah, and here's the thing, like, you would not be able to do that just off the stock market. I mean, some people can, but you probably have to have your own business to really get to that level of wealth, right?
So I just think that when you start talking about these numbers, I think it's very easy to sit there and scroll on Instagram and look at all these other things and see what's being posted on there and be like, well, that doesn't really excite me. It's like, wouldn't you even be able to do that with 4 million? But then when you really think about what it takes to save $4 million for a normal person or somebody that's doing remotely well, it's not easy.
Yeah.
Not everybody is going to generate 370% gains in the market in a single year. Not everybody is going to generate multiple years of doing 200-300%.
That's what I was going to say. You could get one good year like we all had in 2024, but to do it again is the really hard part, right?
And to continue doing it, but also life happens. People spend money. People have life events. Like, there are things that come into play, and I think that everybody would serve themselves well to have an honest conversation about what does retirement look like? What are your expenses going to look like? How much do you need for retirement? Are you going to need assisted living? Are you in good health? Are you not going to be in good health? Like, there are a lot, like, where do you live? Where are your taxes going to be? What's the rate of increase on your taxes? Are you still going to have a more, like, there are so many things to think about. And, you know, being very honest about what the expenses are, 4 million does a lot for you.
Yeah.
Takes care of your retirement. As long as you are living within your means, think about it. You draw down 4% on 4 million. What is that? Do the math.
What do you mean draw down 4% on? Oh, 4% of 4 million?
In retirement,
that's
you
like 160 grand, I think.
It's 160 grand. You're telling me.
Damn, that was good math, bro. I didn't even look at a calculator for that. That was good.
So you're telling me that in retirement, when theoretically you really shouldn't have a mortgage and you shouldn't have student loans or any of that stuff, where as long as you're not being crazy, like, you can't live off 160 grand?
Yeah, that's fair. All right, Steve, last question for you, and then we'll end it out. Rob says, what is your target goal for retirement and what age, if you have an answer for that?
I'm not looking I love what I do. I'm not looking to retire until I'm 65 or 70, as long as my health holds out. And nor do I want to retire before I'm eligible for Medicare, Medicaid, wherever it is. So, you know, even if I hit the number that I'm not going to say, but I've said privately, even if I hit that before, most likely I'm not retiring. My wife will retire, but I'm not going to.
Yeah, no, I know you love working. You absolutely love working.
I love working. I love what I do, and I would not stop working.
Yeah. All right, Steve. Thank you. We appreciate you. We will talk to you next time, and Happy New Year.
All right. Later. Happy New Year.
See you later.
All right.
Guys, the markets are running. Oh my goodness. Tesla trying to make its way back to 400. It looks like it's, I mean, I don't know if it's going to happen, but it definitely looks like the strength is in the right direction. Bitcoin, 98,280. Look at that. This is blistering green, folks. S&P's up 1%. That's great. Uber's up 1%, 1.7. Palantir's up 5.2%. AMD's up 2.7. Broadcom's up 0.5%. Rivian's up 20%. They beat on their deliveries. NVIDIA's at 144. SoFi, great day for SoFi after that downgrade they got yesterday. Tesla, again, trying to make its way to 400. Q's at 516. And then Bitcoin maybe inching up to 99 and then potentially 100K again. Where is MSTR? 322. That's up 7.5%. Is Hood back at 40? Hood 39.82. It's trying to get there. And then Coinbase right here at 267. Currently right now. Not bad, bro. We got some green here. We got some super green on a Friday. It looks like, do I still have that poll up on pullback or not? Or a rug pull? Because, I mean, I know we got a couple hours left, but it doesn't look like the rug here. No, it was Tesla 300. Okay, so no one on the Tesla goes to 300 the next 2 months. So far, the no's are absolutely winning. Tesla right here at 394. It looks like the market's, I don't think Tesla's moving independently. I think Tesla's moving with the market. But the market definitely is not giving an overhang to Tesla on the deliveries numbers, at least not today. And it's rebounding with the broad market. It is kind of weird on a random Friday to start off the year. First Friday to start off the year, the market goes super green. Like we're talking really green. This is not a small green day. Archer is up freaking 17%. Berkshire is green. Snapchat's up 5%. If Snapchat's up, you know things are green. And Bitcoin's up. Even Nubank, it was up 2% yesterday. It's up another 2% today. Square's up 5%. I mean, today's a really, really good day in terms of some of these equities to start off the new year. Santa came late. Yeah, maybe Santa came a little late. ETFs could be bouncing. That could be one thing. There's not a lot of options expiring today because most options are expiring in 2 weeks from the chain for that most people bought or sold options at in 2024, which is around January 17th. Wait a minute. Tesla doesn't have LiDAR. Dude, Ross Gerber yesterday literally was arguing that Tesla would fail because they don't have LiDAR yet, which again, I know some people at Tesla that are engineers. And like when you hear them talk about the technology, Rango, he's a friend of the channel. He works at Tesla. He's an engineer as well. When you hear him talk about Tesla's tech versus someone like Gerber complaining about LiDAR, you know, it becomes pretty laughable. So 395 right here on Tesla. Reddit also, this thing keeps running away. Again, I really like Reddit. I've done some fundamental due diligence on it. I like it. I want to buy. I don't think it's smart to be buying at these levels, but then again, who knows? This one could just run away. And, you know, maybe puts are better to sell on this thing. But again, I think still got to have some patience here because it's only January 3rd. Got to give it some time. But Reddit, I think there's a real bull case on Reddit that's pretty obvious around their data advantage. It's just the thing's up 500% at this point. And you might want to wait for a little bit of a breather if it gets there. Ross has been salty. That is correct. Ross has been very salty. Amit, do you have a price target on Hood or Palantir in 2025? So I don't have one on Palantir because, again, we're just elevated at such high levels. I think if we get to 40% growth, though, we're above 100. If we get to 40% growth, which I think is by Q4 of this year. So that'll take time to get there, but the street could anticipate it before. Could I also see it going down to 60? Yeah, I could see that if there's some stupid earnings miss and then the street gets upset. But I don't think I have a definitive price target on Palantir. For Hood, I think by the end of the year, this thing is $50. And I think that's going to be not the hardest thing to happen for Hood. And the only reason I'm saying this because I have more data on Hood, right? I can literally see their numbers, whereas Palantir I can't. But on Hood, I can do the math and figure out what they're going to earn on earnings. I can calculate their net income. So I think Hood 50 to 55 is very reasonable if the market holds up. Palantir is a wild card. Either we go to 60, we might go to 90. Then it depends. What does Q3 look like? Can we get to that 40% growth? I do think, though, I think 40% growth is coming. I think the street is underestimating. Even the UBS report said they're only going to grow 28% this year. I think they're going to 40%. I have a feeling that AIP is just beginning to scale. They only have 600 customers. Like the customer count is going to go up, and everyone and their mother is looking for an AI operating system for their enterprise that keeps them competitive with increasing their margins. The only way their demand goes down I kind of think as if we have a recession, right? Because then maybe companies don't want to spend as much on AI, even though I think that actually kind of becomes a tailwind. But because then companies need to become more efficient. But that's my argument. Is the valuation lofty? Yes, like that. I can't deny that. But at this point, the market is showing plenty of ability to pay these prices. And this is not retail. Retail's not buying it at 79. That's just not happening. It's got to be the big guys. We know it's the big guys. And if they're willing to buy it, all right, then they're the ones that hopefully can keep this afloat on any level of volatility. Ross blocked me on Twitter randomly because I commented on someone's post showing how poorly his fund was doing compared to the S&P 500. I mean, look, that's the thing about being a fund manager. You can't be that aggressively mean when you manage money and then, your own client's money is not outperforming the market, right? And Gerber really hasn't outperformed the market for a while now. If he had Tesla, I think he would be up, but they sold so much of their Tesla. Every time Tesla goes up, he's like, oh no, we have Tesla in our client accounts. And then when Tesla goes down, he's like, yeah, we're so happy we sold Tesla. So he really plays both sides of the coin. But in general, I think a lot of people are losing respect for him, even if he was early to Tesla. I mean, when do you start buying again? So again, 65 is when I would start nibbling. But then 50, I agree with Steve. If it gets, even at 55, dude, if it gets into those high 50s, I would probably start aggressively buying again. I just don't think we have to get there. But the bears are, saying this thing is going back to 30. There's such a divergence in opinions in the Palantir community. It's like most reasonable people say, yeah, we could go to 65 and maybe max pain is 55 and that's fine. But we also think it can go up to the 80s and 90s on increased momentum. The bears are just like, no, it's going back to 30. And it's like, okay, so we just totally disagree. Like you have one price target, everyone else has a different price target. And now the street has to figure out what it's worth. Yeah, 50 to 65, basically. Marcus right here. Palantir is going to 30. Well, you're not alone. There's some other people that agree with you on that as well. Even Jason was impressed by the strength. Jason, from a TA perspective, he was just like, this thing is holding up at a different level, bro. I mean, just look at this chart. Look at this freaking chart. What does Dan Ives says? Put in the loo. Like it's just an incredible chart. And at every level, there were people saying this thing doesn't deserve 15 to 85 last year. It's just beautiful. It's holding up. It's not really showing material signs of weakness. Now, granted, if you look at the 5-year, the reason this chart looks so beautiful is because the chart looked very ugly if you were here 3 years ago. So it's kind of the sunshine after the rain, but it is very bright sunshine with Palantir here up 5% currently on the day. All right, folks, I think that's it for today. This was a 3-hour stream. No one can say this was a short stream. I think that's it. We'll be back on the market close at 3:45. Nothing too crazy today after the bell. We're just going to see how this market closed out for its first week of 2025. Bitcoin right here at 98,175. And then that's it. We are done for the first week of 2025. What are you guys doing over the weekend? Is anyone going anywhere, doing anything? I have a couple things to do this weekend. A couple places to go, and then I have a couple meetings to take. But yeah, outside, I'm going to be home for the majority of the weekend. Nothing too crazy. And then we start officially the new year really hasn't started to me. On Monday is when the new year actually starts. That's when we have real okay, we're starting the new year, even though it's 2025. So next week we officially begin. Watch market open on the weekend. I appreciate you, Lulu. Thank you for being here. Word of the day. Let's do word of the day. What do we got? Word of the day is resplendent.
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 Shiningly brilliant, gleaming. The mountain peaks were resplendent with a freshly fallen snow. The meadow was resplendent with wildflowers that caught the afternoon sun. Well, I was just talking about Palantir being the sunshine before the rain. It was shining. So I guess you could say Palantir is resplendent. And their chart over the past year is definitely resplendent. But to be honest, the whole market is resplendent today. Tesla, are we closing? Are we getting into that 395 range? Yeah, 395 on Tesla. That's resplendent. Robin, it looks nice. MicroStrategy Palantir 79.10, Uber, S&P. It's a green day. It's a nice green day. Bitcoin as well. And looks like it can end nicely green towards the end of the day as well. All right, that is it, folks. That is it for me. Thank you, everybody, for being here. We'll be back 3:45 on the market close. If I don't see you guys, thank you for being here. I don't know if we're doing Palantir Weekly today. We might. I have to see if other people are free. If not, then we won't have it this week. And we'll be back next week to start the new year. And that's pretty much it. All right. That's it. Thank you, everybody. Appreciate you guys. Hopefully you guys are having a good day. Enjoy the stream. We'll be back on the market close. And then if not, we'll be back on Sunday if we don't do Palantir Weekly for the market future show. All right. Bye, everyone. Have a good one. Bye-bye.